An end to the war in Ukraine. It's Thursday, February 20th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, and today's revolving guest host, one Michael Butler in Chicago. We're here for the next hour as we work through the rest of this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform, if you're on the website, come over to YouTube. Tell us what you're trading, what you think of this market action where we rebound over the second half of the day. Otherwise, if you're already on YouTube, and you're telling us what you're trading, come to the platform, come to the website, tastylive.com, see what we're all about. Gentlemen, it was a tale of two halves. First part of the day, U.S. cash equity opened, stocks are selling off. Then we kind of stop. And while we meander around, volatility does not go up. We look to our charts and we see an S&P 500 back to 6135 right now. It's lower by 0.44%, but it's certainly not the 1% loser we saw earlier in the day. Same thing for the NASDAQ, up by 0.48% right now. Your Russell is still down over 1% in today's session, even as those borrowing costs come down. Treasury yields are lower across the curve as we make our way through today's day, although yields a little bit higher than they were off their lows. Gold, silver continue to advance, but off the highs as gold hits a new all-time high. Oil prices bounce up and the dollar continues to show signs of topping. But Dylan, we have German elections this weekend, which we need to talk about for European risk, if it's EZU or the euro itself. Guys, let's start with our new guest here, though. Dylan, Mike, second half of the day, markets are up. What do you take of this action in stocks here?
It's been an interesting day. It's been a drag, honestly, the last couple of days with such a tight range in the E-minis, but nice to see some two-sided action. Not too surprised to see a little bounce off the lows, given the fact that volatility didn't really move into this move lower. But I guess we'll have to wait and see here with the next couple of weeks coming up. What do you guys make of it?
I mean, Dylan, it's the volatility, I think, is the key here. We were kind of ragging on Tony there a little bit about trading what we see in front of us. But the reality is that's perhaps the most important observation about today, that vol just didn't really go anywhere. And in fact, at a 15.48 VIX right now, we're actually lower than we were when cash equity markets opened this morning. I assume that you are of the mindset that this is nothing to be concerned about.
I mean, for sure not. I as you know, I've been pretty consistently optimistic throughout the first 2 months of this year. For reasons that have become, redundant. But I don't. Why would you be worried about today? If anything, it's a day of calm. The more calm days there are, the more the market settles into a position where I think it's poised to rally.
Interestingly enough, where we settle on the 4-hour chart on the NASDAQ here, it's through the swing highs that we had right around Christmas and in mid to late January. On that daily time frame, that's a nice little lower wick that we have off that 13 EMA. Mike, I just go up the Fibonacci scale, 5, 8, 13, 21, 34. And so that's a really clean bounce off the 13 EMA today to bring us back into breakout territory. So the broader indexes still look pretty healthy here. This is, of course, Opex week, where we generally see, as the seasonals go, some weakness in the second half of February. Mike, you're more of an options guy than I am. Do you see anything this particular Opex window that piques your interest?
We've been trading earnings with the lack of implied volatility. We kind of have to cherry pick our exposure to higher implied volatility environments. So we've been involved in a lot of those. We saw BABA continue its rally higher today. We saw Walmart make the opposite move to the downside. But I'm focused on NVIDIA for next week. It's nice that we have this huge tech stock that kind of rounds out the earnings season here with an implied move of almost $12 on $140 stock. Pretty high, 8% expected move for next week. So if there's any kind of surprise to the upside or downside, I think that could spark a movement in the broader NASDAQ, I guess you could say.
Dylan, there was really a tale of two themes here in this market today when we think about BABA and Walmart. BABA, of course, has good earnings, and more importantly, it has more skin in the game with the AI revolution that's happening in China. People are very optimistic as it's integrated into their platforms. We've seen DeepSeek integrated to a number of Chinese apps effectively immediately. So they're optimistic moving forward as well. Likewise, earnings there, 284 was the consensus. They beat. Walmart, on the other hand, different side of the story. Very concerned about the impact of tariffs moving forward, outlining in their earnings call that the tariffs from China and Mexico will present a serious impact to their margins. So with a consumer that's kind of treading water and that in the background, it's not exactly the best story for consumption in the months ahead. But the tariffs, of course, haven't been implemented. So, I mean, how many times are we going to do this dance, Dylan, where we hear about tariffs and the market overreacts only to pick itself up a few days later?
Well, you know what I was thinking about? Obviously, this is something I suppose a lot of us think about. I certainly was thinking about exactly this earlier today, and then multiple times over the past month or two. And I'm starting to wonder. Remember last year when it was sort of pretty reliable to short oil on price spikes due to geopolitical concerns with the Iran and all this jazz that was going on at this time last year? I almost wonder if buying the sell-offs on the tariff dips is the new sell oil on the geopolitical fear spikes. I haven't done it yet, but I mean, like, look at this Walmart chart. There's a few of these where I'm increasingly inclined to buy the tariff dips, basically the same way I was inclined to sell the geopolitical fears on oil last year.
That's really interesting.
I mean, obviously, sorry to interrupt you, but there's going to be some point, obviously, where you may get, you may rue the day, but it seems like more often than not, it's going to work.
I mean, Mike, it kind of feels like that's been happening, hasn't it? We've seen since DeepSeek Monday that the reaction function for markets closing the gap has become shorter and shorter, right? DeepSeek took 5 days. We get the tariff news from China, Canada, Mexico. That takes 2 days to fill that gap. Then we get the Super Bowl Sunday aluminum and steel tariffs, and the market closes the gap within an hour. I mean, shouldn't we reflexively, until we get punched in the face, isn't the market teaching us a lesson here that this is a boy who cried wolf situation every time?
Yeah, I think we're seeing that in a lot of different markets. Don't forget, we got the Hims commercial, the Super Bowl Hims commercial that shocked the world, and that created a massive rally. Now it's a meme stock, ultimately. But yeah, I think when you look at something like crude oil, for as long as I can remember, the last 3-4 years, we've seen really healthy two-sided action in there. And if you're taking static delta by way of like a micro crude contract, that's my preferred method. If you're waiting for these big dips, like I got in a couple weeks ago at 71.18, got out at 72.90. So I made a couple, almost $200 there. But the product is small enough to where I can wade through volatility. So I really like the micro crude contract, just buying or shorting it straight up, and then just waiting for your hopeful two-sided action in your time frame that you're looking for. But the static delta and the micro crude and being able to afford really any volatility in there, especially if you're buying the dip, I really like it as a trading vehicle, and I agree.
Yeah, just in terms of those product specifications, CL, the tick value is $10 there. The overnight requirement is $9,392. In MCL, the product that Mike is talking about, micro crude, it's $1 tick value, and the overnight buying requirement is only $942. And like on CL, there are options available on MCL. So it's not, like trading silver or gold something. In fact, more like trading gold than anything else. But MGC, MCL, they are products that I like. Unlike MGC, though, there are options on MCL. I don't have a particularly strong bend on energy right now. Up until yesterday, I was long natural gas. And yesterday I stepped out of it only because I had the trade improperly structured, where the short put spread was so well positioned that even on a 4% up day, I only made like $20. So I had to get out of the short put spread. And I'm looking to re-enter at some point, maybe a little bit of a deeper pullback closer to 370 or so. I don't know if we're going to get there. But oil's been very difficult for me to trade personally because I just don't see the vol in it right now. And we're in the middle of that 52-week trading range. And the geopolitics, Dylan, they're basically a non-factor right now in terms of producing an environment where we could fade those kind of spikes.
Exactly.
Yeah.
Which is why the tariffs were sort of catching my eye, because I was like, well, there's no more geopolitical fears, but we are getting these tariff blowouts from time to time.
Yeah, and I think if you look at the price action today and how the market unfolded around these comments, we kind of see that here. Yesterday, Palantir's hit really hard when we get this announcement that the DoD has been ordered to give an 8% funding cut. And then another layer of that funding cut is it's going to be 8% this year on top of an 8% next year and 8% the year after that and the year after that, the year after that. So compounding that, you're looking, 35, 40% of the DoD's budget missing over the next 5 years. That's a pretty substantial part of U.S. spending, and government spending helps growth. But as the details come out this afternoon, what do we see? It's about reappropriating 8% of the DoD's budget. Okay, so Dylan, hear me out, right? It feels like, and I've tweeted this, what we've seen over the last few weeks in the administration is more or less swapping out Democratic elite for Republican elite in many ways. If we're just reapportioning and reappropriating the money, if they're reviewing the contracts they have and they're reviewing 8% of the budget per year, that could just mean that companies like Northrop or Lockheed Martin are losing contracts to names like Palantir, right? As they update and modernize the defense technology. A name like Anduril, unfortunately not publicly traded for this conversation, but a defense contractor like Anduril would be one of those names that probably gets some of the money of that 8% that's being reappropriated to modernize defense. So we unpack all this. Trump says today he wants a balanced budget. We talk about this on Futures Power Hour. The U.S. deficit just in this fiscal year since October 24 is $840 billion when we were looking midday today. All right. If that's the run rate since October, you're talking about an economy running a deficit, 1.6, 1.7, $1.8 trillion, depending upon how tax receipts come in. And so for Trump to say, I want a balanced budget, well, how big did the economy get last year? It grew by about $1.2 trillion, $1.25 trillion in actual nominal dollar terms. So if the government's going to stop spending $1.678 trillion and GDP grew by $1.25 trillion, that means we're actually in recession moving forward if you go right to a balanced budget. That would be awful. But then again, this afternoon, what happens? House Appropriations Bill continuing to make its way around Capitol Hill. More details coming out. $4.5 trillion of new debt still on the board over the next 10 years. There's no balanced budget coming down the pipeline. Those comments are driving markets crazy, but when the rubber meets the road and we're looking at what actual policy and legislation is being pushed through, it's not what's being discussed from the White House right now. So, Dylan, I hate to say this. I think we got to fade everything. I think we got to fade all of these tariffs, everything. The tariffs, the talk of the budget. If you did it today, you made a lot of money.
No, I totally agree. I mean, it'd be interesting if you just sort of went pure. It's like the reverse Kramer, but it's like the reverse Trump, where whatever the Trump rhetoric is, whether it's, anyway, I agree with you. To be succinct.
Mike, maybe we got to back test this, but this looks like after the first 30 minutes today of those headlines coming out, the market ultimately hit its low. And if you got long 30 minutes after the headlines came out and stayed long the rest of the day, it would have been a great trade. I didn't take it. So it's not like I'm saying this out of my own, personal conviction to do what Dylan and I are discussing here. But in terms of how this news flow is impacting the market, it doesn't seem to be something that is having a lot of staying power in the short term.
Yeah, and you've seen it time and time again. We are definitely in a kind of buy the dip market. That's not to say that can't change quickly. The market is and has been moving very quickly, and I think that's the biggest distinction between something like this year and maybe something 5 years ago, where you saw more sustained, heightened implied volatility and realized volatility, where now you're seeing these huge bars and then kind of a reversal that meets you in the middle of a continued low implied volatility environment. So I like to say, is if you're seeing these big moves to the downside and you don't think much has changed, just look at volatility. If volatility is still low, then that kind of helps you confirm your bias. But if implied volatility spikes and you see the curve of implied volatility kind of flatten out, we're in a pretty steep contango now. But if you saw, let's say, 150 point sell-off in the E-minis and then another 100 point sell-off in the E-minis, that kind of movement might change the outlook or the curve of implied volatility that we're seeing today. And if and when that happened, then I would maybe take a step back, size down a little bit, maybe throw on some more short delta, neutral delta positions. But I've been waiting and kind of taking these dips that we see and using them as opportunities to place small defined risk trades to the upside.
I wonder what the chat thinks here. I mean, how are short-term traders reacting to some of these headlines? I've made this clear to people so many times, Dylan, I'm a macro guy. I'm a garbage scalper, so I try not to do it. Because when I do it, I get my hands burned time and again. Just not how I operate, not how I operate well. So I'm curious, if there are zero DTE people or short-term traders in the chat, how do you handle trading around these headlines and whether or not there's going to be follow-through? Curious about various people's approach, or if they're just using duration, right, Mike? That's one way to avoid it. Just get a little bit of extra duration in your trade, and so you retain all that intrinsic value, and a day-to-day headline like today doesn't knock you on your butt.
Yeah, totally. Just keeping it small. If you have a strong directional conviction, maybe you go defined risk. But yeah, if you're comfortable assuming the risk of shares, undefined risk is totally fine too. High probability trade, like we talk about all the time. But it really comes down to the product you're trading and your assumption. Like going back to oil, if I wanted to trade CL straight up, I would have to do some kind of options trade that was defined risk. But micro crude, I can just take a directional shot and hold that contract because it's significantly smaller.
Mike, right around now, we typically just take a brief venture into the world of sector performance here, and I like to throw up this visualization for people to see how the market moved around. In terms of the top performers today, gold miners, junior gold miners, those are at the top of the heap, 2.88% higher for GDXJ, 1.69% higher for GDX. As we can see here in energy and in healthcare, those are also performing well. Energy's up 0.91 via XLE, healthcare up 0.56% via XLV. But it wasn't a great day, of course. The broader indexes are down. The worst performer is KRE, regional banks. KBE is also a weak performer, followed by XLF. Those are down from 1.8 to 1.53% respectively. We also see retail, discretionary. Those are in the red. So not the best kind of sector performance, if you will, particularly when commodities sit across the top of the board. Mike, before we get back to this big macro story, and I want to jump in with you, Dylan, about Russia, Ukraine, and some of the headlines today. Do you have any particular strong thoughts about any of the gold names right now, any of the movement in gold that we're seeing, given how the gold miners have been trading here the last few sessions?
I mean, my only feeling is that I feel like I wish I was smart enough to get in there. I don't know. You know, I mean, I watch every time, whatever gold does, I can never get myself to any sense of anything other than ignorant observation. And maybe the instrument that I feel the least qualified to have an opinion on.
Yeah, gold is tough because as we can see, it is moving significantly, but implied volatility is not rising in here. It's notorious for having really low implied volatility. So I actually have a short gold position on right now by way of a broken wing butterfly in gold futures. So my short strikes are at 29.30. So we're not too far away from there in the 34-day cycle, but definitely staying defined risk in here. And you know, for good reason.
And just out of curiosity, Mike, what's the basis of your decision to have a short position of any kind or any directional position, any which way in gold?
Yeah, I was not participating to the upside, and I just saw it as an interesting way to get some downside delta in my portfolio because in all the other equities, I'm pretty much long. So I'm looking for something that can kind of offset that in some way. And gold has just been skyrocketing to the upside. Because it has
just
low
on the extremity of the move and the mix of the rest of your portfolio, basically.
Exactly. Yeah. But I'm getting slapped right now. 34 days though. I mean, Chris, we'll see what happens.
Yeah. I mean, do you have gold opinions, Chris? I mean, can you even conjure them from something and then when you do conjure them, where do they come from?
I have this old light bulb here that I look into, and and
it reveals truths to you. You just trade what's in front of you.
Yeah, exactly. Right. and no, you know, for gold prices, right. We've gone back and forth about this, done with the central banks and reorganization.
I know the stories, but
you know, I think what Mike's talking about here, though, is perhaps the most prescient observation, because if our whole ethos is when gold's breaking out, you kind of want to see volatility rise. And on this 4-hour time frame, let's go to the daily, so it's a little bit better review. But we can see here that when we break out in January, gold vol starts to creep up from the 40s all the way up into the 60s, high 70s just a few days ago. But the past few sessions, as gold's been meandering around up here, gold vol's been coming off the board. Now, is that a similar situation to what happened here at the midpoint of December, where gold vol came off and ultimately it meant a base? Because if it means a basing effect, then this would just be a base before the next leg up. Or does it mean that the rally's run out of steam? I don't know, but I'm still leaning long deltas in here because this is a momentum trade as far as I'm concerned. And as a momentum monkey, right, I'm going to be as long as I can or short as I can be for the duration of the trend. And the trend here, going back to early January, this little 513 envelope in the EMAs, when the market's dipped into there, it's been a great buying opportunity. And we haven't seen that characteristic of this market uptrend broken yet. So I'm strapped in still, 2950, 3,000 call spread. We've been chipping these up over the course of the past few weeks, 2850, 2900, 2950, 3000, ever since the breakout began. And it's been a trade we've been working with for the better part of the last year, as you know, Dylan. So there will be times when we're wrong, right? The transition into the long trade at the end of October, that was a bad one. We skipped it in December. We re-entered in January. We re-entered in February. And I think really that's how you got to play this, right? As long as the chain of trades in a momentum setup keeps working, place them. And if one breaks and doesn't work, take a step back for that cycle until you get the setup that affords you the next leg higher like we did in January, and then re-engage with the uptrend, or vice versa if it's a downtrend. So I'm strapped in right now. We did hit a new all-time high today. And as you know from my equity commentary, I don't think that all-time highs are a bearish signal personally. As I would say to Ilya if you were here talking about the NASDAQ.
Yeah, I think it's
cheap shots.
I think it's a good point, especially with the splits we've seen in some of these stocks. Like I'm expecting Netflix to split, Costco to split, and over time I think the post-split prices will continue up. Like you have to reach an all-time high to continue higher at some point. So I agree with you. It doesn't necessarily mean that it's a bearish signal. Getting some answers in the YouTube chat from your 1 day, 0 day question. A lot of people just doing put spreads in ES or SPX, doing the Jiajun trade, which is put spread at 11 a.m. or 10 a.m. Central. Some people seeing double and triple bottoms, which gave them more confidence paired with low IV. So kind of this stuff we're talking about.
Yeah, and I think that's what Tony says about reading the tape in front of you. And Nick pointed this out today, middle of the day on Futures Power Hour. You saw that prices collapsed, but like fixed futures are up 15 cents, 10 cents. That's kind of inconsistent behavior. And it is an Opex week. So, do you want to read too much? And is it a market that's being pushed around by headlines? Sure. So good on the people that take advantage of it, right? I mean, I can see in hindsight, 1, 2 higher lows or break the downtrend. We get our acceleration right around 2 p.m. Good to go the rest of the day. But I'm not, last few times I've tried to scalp, I was directionally correct, but not ultimately to the right price level. And so wasn't a winner. Just can't do it. Dylan, so we have gold. You've been a silver connoisseur, our resident Hunt brother who helps corner the market. We now find a 1.2% gain today. And after several attempts and not quite being able to punch through the high we had in December, today we do on a closing basis. So this is our highest close in silver prices since October 30th, believe it or not. It's finally started to make a move to the upside here. And there's only a 26.8 IVR, which, we like vol going up as we break out, but it also means getting some upside out of the money call exposure could be a little bit not as expensive as it may be otherwise in, say, gold. You have traded silver successfully in the past. You say gold confounds you.
Silver, for some reason, makes a hell of a lot more sense to me. I think because it has some practical, there's some industrial relevance to the metal. It's not just the same way I have no opinion on Bitcoin because it's just a meaningless speculative instrument, worthless and pointless. Basically that's what gold and Bitcoin to me are the same thing. They may all go to 10 billion or they may go to zero, like who knows? And whatever they do is a function of nothing other than, the animal spirits of a crowd of people, whereas silver has some industrial application, and also I think is more tied to just broader inflation fears and economic activity. Like there are things that at least, I mean, intellectually that I can resolve, that I can make peace with, to arrive at a point of view that says, okay, yeah, I'd love to own some silver. And so, yeah, I love the idea of getting some silver calls, especially when you get the sort of, I know nothing from the technicals other than what I learned on this TV show here, but to the degree to which you like the technical behavior, I like the overall movement, and I like the inflation and industrial and economic factors. And I also think that when gold is doing what it's doing, that doesn't hurt silver. So I like the silver out of the money call.
Yeah, some of these, I'm still riding the call spread that we have in SIK5, but given where we are, it's feeling like we need to roll this out a little bit. There's still 34 days to expiration on the long 33, short 33 and a half. But given the fact that this market is beginning to show signs of breaking out, maybe going out to 36, 37 and rolling forward some of this becomes the right way to approach the market moving forward. I'm not there yet, Dylan, but we're heading into the end of the week, and at this, this juncture, do I want to go into a weekend again where we've seen these markets have this potential, gap risk? The duration will ultimately be my friend, and if we're making a trek towards 36, that's consistent with my view that we would be going back to the highs from October, technically speaking. Gold and silver have been doing well this year. They've been outperforming the broader market, regardless of the headlines. You got to stick with your workhorses, don't you?
Yes.
So got to keep the heavy lifting going. Gold and silver are saving me today. I'll tell you that. Too exposed to stocks. All right, Mike, let's move off of this. So we talk about the sectors here, broadly speaking. I couldn't help but notice the banks are the ones that are really taking it on the chin. Is this just a function of the fact that this is the leadership group this year and people are taking profits and rotating as we get to Opex? Or should we be looking short deltas in banks?
Well, similar to my short gold position, I placed a bullish JP Morgan position today. Just kind of in line with the idea. It's the same idea. There's nothing different with the markets going down, vol's not moving. What's the biggest mover? It's the banks. What bank would I put my money on if I were to choose one? JP Morgan. But still, defined risk. This is another low IV product. JP Morgan, even into the sell-off today, still only has 25% implied volatility, and that's in the April earnings cycle. So I actually really like these setups where I'm buying the April cycle that has the implication of maintaining extrinsic value because the earnings cycle is in that expiration, and then selling something like March against it just to reduce cost basis. So I got into the long 270 call, short the 280 for a total debit of $715, and it's a 10-point wide spread. So if we go back up to 280 or around there, this will be a $400 winner. I can take it off. If not, I can roll the short into the earnings cycle and capitalize on that implied volatility and then ride it through earnings. But this is the kind of stuff that I'm looking for in this kind of market where vol's super low. We're seeing two-sided action, but it seems to be very concentrated around specific sectors each day and specific names each day. So today was just the lucky winner of the banks, and I chose to get long JP Morgan.
I think that's the most remarkable part about what's happening with some of this turnover, Dylan. It's kind of like what we saw immediately after DeepSeek Monday. Yeah, like some of the high-flying names are down, but was capital really leaving the market? Not necessarily. Some of these names that we've been talking about have been beaten up recently, though, so I suppose we should take a walk around the phase 2 name. Meta here has had a rough 3-day stretch. Palantir, of course, has had a rough 3-day stretch, although note that it does turn right off of that 1-month moving average today, and from where it opened, it closes higher than where it opened. Talk about those DoD budget cuts and what they really mean. Palantir's probably not seeing their money go out the door. Given their closeness with the PayPal mafia, yeah, I think Boeing is going to lose some contracts. Northrop Grumman's going to lose some contracts. Palantir and Anduril are going to get that money. We go over to a name like Axon. What a high flyer this was. Gosh, Dylan, some of the phase two names are taking it on the chin right now.
What's going on with our phase two story? This is terrible. You know what the problem is? It's Grok. This third generation Grok on all the Twitter handles is messing up the whole situation just because it's in front of everybody and it's easy to use and it's pretty impressive. So I actually think the whole Grok 3.0 is an issue for a lot of folks.
Is Grok a problem, Mike?
I actually read an interesting tweet related to Grok today, and Grok basically said that SoFi should be a $30 stock based on its competitors and a number of different things. And I was like, okay, this thing can actually like think pretty substantially on its own, but we'll see if that's correct or not. But yeah, I mean, the influence in AI is real, and I think it makes everything faster, more efficient, regardless of what sector you're in or where you're working or what you're doing. So, and I think that translates directly into kind of the big volatile market movements we've seen in some of these products like SoFi. But yeah,
so I'm going to share I'm going to share the tweet here before I put it on the screen. All the liabilities possible. I do not take any responsibility for what's going to be shared here. These are not my own analyses. The person who wrote this, their Twitter bio is, quote, long-term SoFi investor and propagandist. Hashtag SoFi. So keeping that in mind here, you talk about Grok potentially doing long-form analysis, and they do some of the parts method, which means building from the bottom up and applying various growth rates, assuming various industry factors, yada, yada, yada. They get to a whole valuation comparing to peers, and they talk about a $31 share price, right? This puts it without getting to 300 times PE for Palantir. But this is a very detailed analysis, and this is, we've talked about AI. How are you using it? I'm using it to do analysis that I would otherwise have an intern do years ago, right? I just have my formulas, my spreadsheets, and Chris GPT answers them back for me. So I could do this now without, an entry-level analyst. And I think that's a real problem for people in our industry, Mike, because there's a lot of people right now who go to grad school to learn how to do this. And if you just know how to back check this math, this is hours of modeling that's out the window. This is a conversation you have on your phone with something. Again, I disown and do not take ownership. I think we can absolve all three of us and the broader network of any liability for any information contained here within, but as just an example to demonstrate what Grok is doing and how, these AIs are scaling up and producing some very interesting type of research right away. But Dylan, I think it was the point you made yesterday, thinking about it for the past 24 hours. Twitter, AI, X, whatever we're calling it these days, it has 250 million daily active users. ChatGPT plus Copilot plus Claude 3, and that's maybe 200 on the other side of the ledger. I'm curious if either of you guys also want to put that in context of what Satya Nadella said last night. If you didn't hear, he had a pretty interesting podcast interview to talk up Microsoft's new quantum computing chip. But he also kind of downplayed the prospect that we're getting to AGI or some AI superintelligence anytime soon. He said that the proof of the pudding will be when the economy is growing 10% year over year. That's how we know AGI has arrived. Dylan, is this a Jack Welch type of thing where he's just trying to keep expectations low so as to not let markets get over their skis?
Maybe. How can you possibly know? I would set aside trying to speculate what the psyche is and ask yourself, why would you not own Microsoft every time it gets lower, considering its recent history and considering the context of AI?
Mike, I think the argument would be Microsoft hasn't done anything in a year. Like, what's Microsoft, right?
Yeah. I mean, I see that side of the coin, but I agree with Dylan. I mean, it's just one of those products that is likely not going away. And like, when was the last time you had the ability to get in at these levels aside from early 2025. But like before that, I mean, and really another way to look at it is, okay, we saw it skyrocket from 400 to 460 in a matter of weeks. Why would we not? How could we not see that again? Not necessarily in a 30-day time frame or a 60-day time frame or a 90-day time frame, but the more time you give yourself to play out your assumption, especially in a product like Microsoft, I bought the dip in Microsoft, as you might imagine. I'm like the buy the dip king here, but I also got spanked on the 460 call for earnings when it tanked. So there's no risk-free money, but I'm looking at these products and I'm saying to myself, this is a product that's likely not going anywhere, and it's back at the lows that we saw in the earlier this year. So I'm dabbling for sure. And NVIDIA too. It's like when you look at NVIDIA, you had the knee-jerk reaction with the DeepSeek announcement, and that was completely reversed almost exactly. How many green days in a row? 1, 2, 3, 4, 5, almost 10 green days in a row. And now we have earnings next week. If they post a big number, could you see this go back to all-time highs? I think you could.
NVIDIA's turnaround has been remarkable. I'm kicking myself here. Not entirely, because the trade that I had on was the 155, 160 call spread, and I was on the other side of the decay curve, so I didn't think, and it was before earnings, so getting back up to there before earnings, I didn't think was going to work out, so I had to take it off. I still have some SMH long delta exposure myself. I don't know. Technically, I don't know what you would call this setup, but my goodness, does it look bullish? Right? We have our breakout here to new highs. We consolidate for a few months. We break out into new highs. We consolidate for a little bit. Sure, there's a bit of a breakdown, but a breakdown that doesn't clear out prior swing lows that we have right around the Fed meeting in September. We rally back up into the prior consolidation. Now we're trying to get through the downtrend that's defined this year so far. A punch through 145 covering up into the 150s is very possible. And it just, the takeaway from what Satya Nadella said yesterday too was not just that we may not get to AGI, was that the demand for compute is scaling exponentially right now. Now, whether or not AI is leading to anything other than companies spending money on each other's AI-related services is a different question. But as these AIs are getting more complex and they have their own agentic abilities where they can spawn their own AIs to produce tasks, and those AIs can produce AIs, you need a lot of scale, because it's not just me or you or Dylan or Mike who's using the AIs in that fashion. That's everyone. Every time they use ChatGPT or a DeepSeek or what have you, they're requiring compute and they're requiring inference. That's ultimately where the scale is needed for these GPUs. The training itself is not the big deal. It's the actual inference and scaling the inference. So Satya Nadella said yesterday in this podcast, actually, we see the need to continue the CAPEX. When he says he's good for his $80 billion, it's not that they're not going to spend it. They're going to spend $80 billion this year. And then next year, it's going to be 85 or 90 billion. And the year after that, it's going to be 95 or 100 billion. And they're still planning to get up to about 110 or 120 billion dollars in CAPEX related to this story over the next few years. So whether or not it helps something, he says we'll get there 10% GDP growth, fine, but the money's still coming in the door. And for NVIDIA, one has to think, Dylan, your point has been that DeepSeek tells us this can be done a little bit more cheaply, which means that if you want to try your hand at building an LLM, you can try to crack this code by not having to buy 100,000 GPUs like Elon Musk did, right? You actually have opened up a segment of demand, perhaps for smaller companies and innovators that don't have as deep of pockets as a Microsoft or an OpenAI.
But don't you think Tony made a great point yesterday, which is that at the end of the day, it is accessibility and distribution. That basically AI at some level of performance, we'll call it, level 1 or class A, whatever the top category of AI functionality is, that anything in that first category is more or less equivalent, and that by virtue of its equivalence, it's the most accessible and the easiest user interface and the most accessible AI will be the winner, which I think is why people are somewhat perplexed by someone like Apple, who in theory should be able to have a super AI on every iPhone in the world. And I think it's why Musk is in a really good position at the moment by having Grok at the center of the Twitter platform. And I also think Microsoft is in a good position because of their ability to widely distribute GPT. I just wonder the degree to which we're that obsessing over the function of the AI is less relevant than assuming that all top level AI will be similar and that distribution is destiny, which is why someone like DeepSeek becomes irrelevant because their distribution is virtually non-existent.
What do you use the most, Mike? Do you use any of these chat bots frequently?
I use Dr. Data's tastylive AI tool that he made for us every single day, which for a little behind the scenes, it basically transcripts the shows that we're doing day to day. It scans through them, gives us headline ideas, description ideas, and it, like we've said, it makes it very easy to create a nice, succinct description or title. So I use that every single day. Shout out Dr. Data. Other things, ChatGPT. One of my friends, I was actually surprised by this. One of my friends, I was talking about making dinner, and he's like, "Oh, I use ChatGPT for recipes all the time." And I kind of laughed. I'm like, "Oh yeah," I'm like, "Are you kidding me?" But when you think about it, instead of scanning through the internet and trying to find the perfect, Pinterest post or whatever the other sites are, you can just ask an AI bot and it'll do it for you. So, or if you have you've got some artichoke in the fridge or wherever, and you're like, what's the best pasta I can make with artichoke? You're going to get a pretty damn good answer out of that chatbot. So it's just the most efficient thing. Like it's created seamless efficiency, and any walk of life, like whatever you're doing, you can use it in some way, shape, or form.
Yeah, so I definitely use it with cooking for sure. Last year, my mom was like, "Oh, have you been using AI?" Like, yeah, of course I've been using AI. She's like, "Oh, you should get it to help you make a Mother's Day dish." And I'm like, challenge accepted. I almost went to culinary school. I'll use the AI to design a whole Mother's Day menu. So my wife's family's part Japanese. I'm Italian. So one of the dishes was like a Japanese miso garlic scampi, right? And like, it was
Amazing.
Delicious. And this AI came up with it. Like, I would never have thought to do that kind of fusion for a dish in my entire life. Seems sacrosanct as an Italian, Dylan, but it was quite delicious overall. But yeah, I mean, I use it all the time for everything. It's completely displaced my Google use. I don't think I've used Google in like the past 3 months at this point, maybe longer. And for the recipe stuff, like, I just hate having to read those people's stories. It sounds so
That
cool.
is true.
But like, I don't need 800 words on how you picked fresh berries and like you remember the scent of lavender in your grandmother's kitchen. Just show me how many cups of flour I need.
Yeah.
Please and thank you. Right. That's probably my worst opinion I have in my head right now about anything. But I can't help but think that there's something we need to discuss, Dylan, about what's going on in the euro, because this weekend we do have those European elections, Germany going to the polls. We could be waking up on the futures market open on Sunday night, with a very different set of leadership in Europe's largest economy. Is the market underpricing euro risk here and the implications of what an AfD victory would mean for the Russia-Ukraine war?
I think those are two different things. I think that, yes, I think the market's underpricing the risk, but I don't think that risk is relative to the Russia-Ukraine war. I think that risk is relative to a broader move towards a more conservative government in Europe, meaning France specifically. So it would be more that both France and Germany are about to go full, deeply conservative. and that the market is underpricing that risk. I mean, I guess what you're suggesting, that a conservative German government adds to the Russian-US alliance to end the war. I mean, the thing with the war is I don't think Zelensky is going to give it up. I think Zelensky is going to try to get a nuclear weapon. That's what I think he's going to do. Now that Zelensky has basically realized that he's at war with the United States and Russia in his mind. So U.S. and that Russia's new ally is America. Russia and America are now the opponent for Ukraine. And I believe that the risk right now is Zelensky's shopping for a nuclear weapon, which I don't think is relevant to the German elections. I just think that the German elections are relevant to Germany and France.
So then is there a trade there in European equities heading into next week? I mean, we do have a day to place trades here. European equities just moved up to a fresh high. They've come off a little bit. Is this a top that we should be fading?
Yes.
Why?
Because the reaction to a conservative government victory in Germany and in France will be perceived to be increasingly negative for global integration of Europe into economic activity. That Europe's basically it would mean that Europe's going to be increasingly isolated with less and less economic access.
Mike, this is really more of a currency discussion conversation. But have you found that there's any trading opportunities in sectors or individual equities, the way that you approach the market around some of these geopolitical headlines?
It's always interesting. I feel like it kind of falls under the same umbrella that we've been talking about, where you see a news headline, the market reacts, the market retraces that reaction a couple of hours later. But if you're looking to get specific into some of these currencies, I mean, when you look at the euro, it's bouncing off of recent lows in 2025. Japanese yen, same thing. But a lot of these are tied, these are all tied to the US dollar as well. So I think you can take both sides of the coin either way. But these, just like gold, low implied volatility product, the currencies are super low implied volatility products, and you're seeing some pretty substantial sizes of these bars. So if you're looking to place trades in here, you're getting the realized volatility, and you can get into options trades in a very cheap way relative to the notional risk of the product. So it's definitely been a trader's haven to the upside and downside, just simply because these products are moving in a pretty substantial way.
The currency markets have seen higher IVRs than what we're typically used to. It's only a 39.5 in the yen right now. For the euro, 59.5. The Canadian dollar, 57.3. Over in our British pound, we're looking at 25.4, and the Aussie up to 49.6. But I think if we're talking about a substantial turn for things, if we're thinking about China being a significant story, Dylan, our good friend and usual host, Ilya, has been pointing out in recent weeks that while Chinese stocks were rallying, you weren't seeing that kind of confirmation in those China-sensitive assets elsewhere. I think we're going to have to, put that theory to the test and ask him about it next week, because we now have an Australian dollar that is sitting at its yearly high. We have Chinese equities that are in a bull market. We've seen earnings results from Baba today, which were very good. Chinese internet stocks in particular, and those AI names, have been on an absolute tear from the January lows. The best trade that I've missed this year, I should supposed to say the worst trade I've missed this year, because Chinese stocks have been on fire, and I haven't had the direct exposure that I would like. And even copper. Copper has had a pretty darn good run here this year. It was starting the year right around $4 a pound. Now we're up at $4.61. And we have a nice little turn here today at an area where we've been eyeballing it. Should be a turning point. So, Dylan, I think that when we look to the currency market, if we can get, if there's a European election result that for some reason doesn't cause the market to pull its hair out, the broader dollar looks kind of like crud right now, regardless of the tariff talk. This looks like it's rolling over on our charts. It's a new yearly low for the US dollar today, 106.37 in DXY. And a weaker dollar and the potential for lower yields. That's part of the reason why I'm staying long gold and silver. It all kind of fits together as a neat little puzzle right now in my head.
Would you openly short the dollar?
I wouldn't call it shorting the dollar. I have yet to, because no one wants to make a market for me. Every day I've been trying to buy a 007, 0071 call spread in the yen. Today is another day where it goes unfulfilled. I want to buy it 78 days to expiration. I really like this market because I think that we have a great deal of outside potential here for market risk in stocks if we talk about recession and government spending cuts. And also, if the trade war with China doesn't spiral out of control, then you probably see a Japanese yen that can strengthen against its peers because the yuan isn't being used as a weapon to offset the tariffs. So I'm looking at this. It's about a 5-to-1 payout, not quite. 22% probability of profit, 78 days to expiration. Wouldn't mind keeping it in my pocket there. That's really about it, though, because I don't like, I can't tell myself in good faith to get long the British pound, given what we're seeing over there. Broadly speaking about the economy, it's been a little bit better than expected, but stagflation, very much a real risk. And then Canada, I don't know. Are they the 51st state after tonight? Is that the deal for tonight's hockey game?
Depends who wins. Depends who wins.
Mike, I guess the play there is like, what's the deepest out of the money puts we can buy in the Canadian dollar? Because if they are becoming a state, then I guess they're not going to have their own currency anymore, right? So this will get zeroed out.
Yeah, it's going to be an amazing game. I was at a hockey bar for the last game, and the entire place was electric, as you might imagine. Just the fights and then the scoring. It was just pure magic. But yeah, I guess we'll see what happens tonight, huh?
Dylan, you could probably speak better to this than I could, and let's wax poetic on this for a second. This is probably the most important hockey game that we've had in 14 years, right? 2010 Olympics, we lose to Canada, silver medal. Our only two golds are 1960 and 1980. You're a Lake Placid boy. Speak to the importance of hockey in the great American tradition of hockey.
I mean, I won't even attempt to speak to it, but I will advise that anybody who has even the slightest interest, go to YouTube and Google the movie Miracle and the phrase "not tonight." There's a locker room speech given by Kurt Russell playing Herb Brooks to the American hockey team in the minutes before they played the Russians. Now, I mean, I think that because the 1980 game was so seminal, certainly for my generation and whatever, a whole generation of Americans, I think it's preposterous to suggest that tonight's game is anything close to that. That was the peak of the Cold War between the USSR and USA and nukes and all of bombs and whatever. Canada's our closest ally, despite the Trumpian rhetoric. And so this, at the end of the day, is like a neighborly rivalry, only made interesting because of the all the fights in the first few minutes of that first game. I think the more interesting thing here, rather than setting the stakes here or there, is huge compliment to the NHL for scrapping the All-Star game and doing a mid-season round-robin tournament compared to the abomination that the NBA has become. And the silliness of the MLB and the Pro Bowls are a non-event. It doesn't even exist. It's a comedy. NHL may be the weakest of the big four as a sport day to day, but they have now moved to the top of the leaderboard in terms of having the best mid-season break with this brilliant round-robin tournament. And I think that other leagues could take a lesson from it. So compliment. I think that the real news here is great job by the commissioner at the NHL to pull this off.
With that, overtime is out of time, not just for today, but for this week. We'll be back on Monday, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, and our temporary host, but always welcome back, Mike Butler in Chicago. I've been Chris Vecchio in New York. Good luck trading. After this, a brief break. Video on demand, macro money coming up next with Ilya Spivak.
Bond markets surging. Gold surging. The dollar on the back foot. What does it all mean? And Do stock markets care? That's the question we're going to be asking ourselves here today after we get some economic data that raises the specter of another global recession concern. This is Macro Money. I'm Amy Spivak, head of Global Macro here at tastylive. And what we're going to be looking at here is a set of economic numbers that's come out over the past 24 hours, raising some worrisome concerns, and then take a look at the next big inflection point in the global macro story, the monetary policy announcement from the Bank of England. Let's talk about global growth first. And to put this in context, here is a look at the JP Morgan Global Composite Output Index. This is a purchasing manager index for the world at large, and this is the composite. That is to say, it takes in both the service sector and manufacturing. And it's overlaid with global GDP, just to give a sense for why we care about this. So you can see the PMI numbers approximate the trends in GDP, but also run more timely than them. We have the GDP numbers for most of the world coming out quarterly, and even then with a significant lag. The PMI numbers come out monthly and come out with quite a bit less lag, and as we can see here, approximate the trends with good alignment. So you can get a sense for where global growth is going much faster than GDP numbers will tell you that in these PMI numbers, and this is really why we care to look. As ever, the numbers are structured such that 50 is neutral, neither growth nor contraction. Above 50 is expansion. Below 50, economic activity is shrinking. If the further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. What we got today was an update of these global numbers for the month of January. There's been a release cycle that's been ongoing for a few weeks now across all of the major economies, and S&P Global typically puts this together with a number of global partners, as you can see the aggregate here done in conjunction with JP Morgan. And what we see should be sobering indeed. We have a 12-month low on global growth. So take a look at this composite index here in the blue. First of all, we see that global activity has been decelerating since the middle of last year. Obviously, that's a very significant contrast with what's been going on specifically in the U.S. More on that momentarily. But what we see here is that this down move here, not coming from the anemic manufacturing sector, which returns to growth here only just so, pops back over 50 in January, but from the service sector, which heretofore was the source of strength. As a matter of fact, we can see for the global averages, it is the service sector that's held up the total. Manufacturing has been going down and then sticking around basically a flat line. Why is this so scary? Well, as we've said many times before on the show here, global growth is made up primarily by three economies: the U.S., the Eurozone, and China, which together add up to 58% of global economic output. The remaining 42% are vendor economies for the most part, dependent on demand from the former three. So their influence is actually even greater than the 58% implies. Think the U.S. And the relationship with Canada and Mexico, obviously, as we've learned, to great effect this week after the Trump tariff back and forth earlier in the week, where the president levied tariffs over the weekend, only to take them away less than 24 hours later, or at least to postpone them for a month. Think Eurozone and Central Europe or Nordic Europe or even the UK. Think China and all of the Latin American commodity exporters, Australia, New Zealand, the commodity exporters in Africa. certainly most of Southeast Asia. All of these economies dependent on demand from China. So these three economies really are the pillar of where global growth comes from. And so when we see this slowdown right here, it's not just that it's slowing, it's also how the distribution of the slowdown looks that really makes this so concerning. It comes from the US. The last set of PMI numbers here, not surprisingly, looking very much like the global average, a little bit more chipper on manufacturing. Finally, a bit of growth there for the first time in about a half year. But the service sector taking a sharp down step, and that sharp down step giving us the slowest growth, again, in about a year. Moreover, if we take a look at a rival set of PMI numbers, this one coming from the Institute of Supply Management, they also released their PMI numbers for January today. Manufacturing was earlier in the week, and again, it's the same story. It turned out a little bit better than expected, 50.9 versus 49.8. But again, the service sector is where the issue is. Another miss and weakness. And when we look at the components, they are hardly encouraging. Employment holds about steady. That's a bright spot. But new orders come down, as do prices. Now, in terms of market reaction, these numbers gave us that powerful push higher in bonds. It also gave us a rebound from the lows in stock markets, although they ultimately didn't get very far from the ranges established over the past week and a half, 2 weeks, and in fact held toward the middle of the broader range for the S&P 500 since early December. But nevertheless, the markets looked at this and said, well, lower yields because of lower price pressure and because of lower activity growth, that's good. We like that. But under the surface is something that downwind might look much less supportive because, of course, what this implies is that the driving engine of global growth, the U.S. service sector, is finally showing some signs of wear and tear. Compare what we just got from the Eurozone and China to see why. So, again, here's what's going on with the U.S., a 12-month low on growth. In the Eurozone, the composite index just barely managed to scrape its way above 50, which amounts to the first time that this thing has grown since August of last year. October was basically flat at 50 exactly. So, sure, this was perhaps the strongest in about 5 months, but nevertheless, just barely growth is what this amounted to. So the situation in the euro area is still quite anemic. The situation in China is similarly steady, even though, again, here we saw the lowest reading since September. So a little bit weaker on overall Chinese economic activity, but then again, Chinese economic activity has been weak for quite some time. In fact, we can see this sort of steady anemic condition here going back to the middle of last year, which boils down to this. And this is really where the concern is. Since essentially May, June of last year, the trend has been toward a very strong U.S. and weakening conditions in the Eurozone and in China. China at this point is essentially flatlined, and the Eurozone is improving, but that improvement comes from getting out of contraction territory to being able to begrudgingly stand still. So hardly a strong showing. This means that the essence of global growth for basically half a year all of this has been built and carried on the shoulders of the U.S. service sector. Why only the service sector? Well, as we can see right here, manufacturing has been in contraction. Moreover, we've just learned from PCE and CPI numbers that all of inflationary pressure in the U.S. economy still lives in core services. That is to say, inflation from the goods side is actually negative. Not by a lot, it's close to zero, but that clearly isn't where a pull from demand exists. So while the U.S. has been robust, that growth has mainly benefited domestic service sector providers, whereas the vectors to spread U.S. growth globally might have come from goods imports, those things that the U.S. typically buys from abroad, but there's not been strong demand for goods. It's been mostly services. And so the global economy hasn't benefited from the strong U.S. It hasn't spilled over. Now we appear to have a very meaningful misstep and a very serious threat to then what is the only pillar of global growth over the past half year. If we are going to converge back to similar growth rates then in Europe and China and the US, as we appear to be seeing here, we are doing it in all the wrong kind of way, where the US is slowing, not where Europe and China are picking up steam. Needless to say, this means that global recession risk is suddenly back on the menu. Granted, this is only 1 month of data. But if we are watching the start of a trend, then cheering for slower U.S. services because it means lower rates will very quickly turn into panic as you need lower rates, because you don't just then need them for a bit of maintenance to bring borrowing costs down. You need them to address a global recession. Because if the U.S. service sector is headed for ongoing slowdown, there really isn't a safety net to counterbalance that for the global GDP story. The next thing that we have to contend with as we assess global news flow shifts gears and takes a focus on the United Kingdom. Because how all of this now evolves certainly could benefit from the extensive commentary of a major central bank, much of which would be, of course, assessing global trends, both for growth and inflation. And so the next thing that we are going to keep an eye on here is what the Monetary Policy Committee, the policy-setting body at the Bank of England, is going to do when they announce policy. Now, a rate cut is overwhelmingly baked in already, so that much is probably not market moving any longer. We can see here the cut from 4.75 to 4.5 on the bank rate already in the market. We likewise see that this has been relatively steady now for the past several meetings. We're not so much removed on the current implied rates curve from where we were back in December, November, and obviously the main adjustment was really from September, where a hawkish shift in U.S. rates pulled almost everywhere else along for the ride. So it isn't the rate move that's likely to be of influence. It's what the guidance is going to look like. And needless to say, there's all the reason to think that this has implications for the global assessment altogether. Now, we are going to get a ton of guidance from the Bank of England this time. Not only are we going to get the usual minutes from the meeting, policy statement, and a press conference with Governor Andrew Bailey, we're also going to get an update of the quarterly monetary policy report, which is essentially the Bank of England's every 3-month revision of their underlying assumptions. of the lens with which they look at the economy and then decipher policy. So very, very big sort of day here, Super Thursday in the parlance of Bank of England watchers, where you get this onslaught of new information and then a press conference with the governor to explain what all of it means. Now, the trends have been at best conflicting. We can see there's been a little bit of a wiggle here in terms of economic activity. The economy just narrowly returned to a semblance of growth in January. We can see here it's been decelerating since the first half of last year, but it seems to have somewhat stabilized at neutral here as manufacturing improves a bit, even as services idles. So overall, the economy seems to be steadying here, if only briefly and if only at a low level. But at the same time, inflation hasn't really made a whole lot of progress. In particular, we can see that the core reading here, which excludes volatile food and energy prices, has been holding relatively steady above 3%, which is, of course, north of the Bank of England's target, since the beginning of last year and isn't making a tremendous amount of progress. Moreover, the economic weakness that we've seen hasn't really translated into the places where you'd want them to disinflate the economy. We can see the biggest components here, the biggest inputs into these overall inflation readings are restaurants and hotels, hospitality, and recreation. These should be discretionary spending categories that should be amenable to economic slowdown to get prices down. Here's the economic slowdown, but prices are holding steady. So we can see that what we're really looking at here is inflation that's stickier than you might expect, at least at this stage. Now, we can see these were bigger contributors at the height of the COVID inflation scare, but whereas, for example, the influence of fuels, which is this, the influence of food prices, which is this, they've receded as COVID dislocations went away and supply chains normalized, and all those things the Fed called transitory inflation really did go away. These parts of the equation where inflation seems to be stuck and locked up in labor markets, hence the inability of seemingly discretionary spending categories to come in, that continues to bedevil the central bank. And so how this ultimately works out in terms of their guidance has a level of inherent volatility risk to it, because the trends from inflation and from growth seem to be at odds. Now, for the moment, we have a situation here where the Bank of England is expected to deliver 63 basis points in cuts this year, so that's 2 cuts, and 13 basis points next year, which means we're looking at about a 50-50 shot at a single rate cut next year. But 60 basis points this go-around essentially means that we have 2 cuts and about a 50-50 shot at a third one. So as it stands right here, the first one expected to come here in February, the next one on the menu by June, and then we'll see if we arrive all the way at a third one by December. The markets certainly seem to be tilting in that direction somewhat. The biggest sort of distillation of all the many different threads that the Bank of England is going to be unveiling here is probably going to be the voting pattern on the MPC. The way the committee works is a little bit different from other central banks. It's one policymaker, one vote, including the governor, who cannot override consensus. There's 9 of them on the committee. The expectation is that we're going to see a vote of 8-1, or 8 vote for a cut, 1 votes to hold steady, and we get the cut. If that calculus is going to be different, if more policymakers, in other words, look at this inflation story and say, this is something that is troubling, we can't be as ready to cut rates, and it's not an 8-1 vote, but let's say a 7-2 vote or a 6-3 vote in the extreme or the more extreme case, the implication is going to be quite bullish, most likely, for the British pound. In the context of what we're talking about here, though, it will also mean that, much like the Fed, another central bank facing slowing economic activity but stuck inflation is being pressured to walk back rate cut intent, which of course is not good news if the global economy is slowing. In that environment, you want all the rate cuts that you can get if in fact the risk of global recession is on the menu. So it'll be very interesting to watch. For what it's worth, if we look at the economic surprise index for the UK, we can see that UK economic data has tended to increasingly underperform relative to forecasts recently, suggesting that perhaps the Bank of England will take the more growth-minded approach and will get the 8-1 vote as expected. Incidentally, if it's a 9-0 vote, that of course would be a dovish adjustment to expectations, and in that case you might see the British pound lower. You might see global equities cheer the prospect of readier stimulus or more consensus around a dovish perspective. But these sticky inflation readings suggest we may not see the surprise go that way. And in an environment where this is now becoming the story on global growth, and it is the one indispensable part of the puzzle that is faltering, getting to a place where we're not talking about more easing might be quite scary for risk sentiment in general, and of course for stock markets in particular. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions, and we used sixteenths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours? Yeah, and by the way, she bites. She bites. If I don't do this,
where are you in the relationship? Are you at the point where she's like, yeah, I don't really care?
Where is he in the relationship? How much trouble can you be in? That's where he's at. Okay.
Wait a minute. Where are you? Because
he lives in that danger zone, which is he lives in that little bubble at the end. I love that question. Where is he in the relationship? Well, there's 2 bags that are packed, living in the front closet. Okay, I'm closer to where you are than where Scott is. He doesn't.
No. You gave me an over-under on my marriage of 18 months. I went up to you. I gave you a shot. You were one of the first people I told. I said, Tom, I got married. Do you have any advice for me? He goes, I give it 18 months. And he walked away from me, Scott. That's the only thing he said.
He's threatening to strip, Bat.
Well, it's a little hot.
I know, I heard.
It's hot in here, so
It's not hot. It's not. Finally, for once, like, it's not hot in here. Maybe you're having a hot flash.
It's so hot in here. No, I want to take this off.
So take it off.
But
take it off. Do it now. We need the ratings.
I don't want to expose parts of my body if I take this off, so I have to be careful.
Please put your hands together and welcome to the stage, Cinnamon Sauce Grande. Oh no! Yeah! Yeah!
Oh God!
Woo!
Yeah!
Wait, where did the money come from?
Where's all this money from? James is locked and loaded, man. He's locked and loaded today.
I want the money.
Tom, do you shovel with those guns out like that?
I don't even.
Do you do a show for the neighborhood for all the ladies who are working at home?
When I shovel in the snow, I usually take my shirt off, and then shovel with my shirt off in the snow.
Like this. 14 inches of snow. Be careful.
How about this, Sadnov? $500 right now. I'll go down there personally and do it with my snowblower.
Oh, no. Done. No, done. You're going to bring your snowblower down for $500? how about this? Because I'm such a nice person, I do have a snowblower. It's all yours. It's beautiful. It's a big snowblower.
Scott, when you put this away, did you drain all the gas out of it?
Absolutely not. Jews don't do that.
Okay, it ain't starting.
But I'll put money on it that when I go pull that starter, that bad boy fires right up.
I got $20 says it doesn't start.
I'm gonna have a video. We'll fire this little bad boy up. Seriously, I don't think I've used it in 5 years.
Tom is not allowed to do this unassisted.
A snowblower? You know what? That's actually, Beth has a point.
Good job.
You see that?
Oh my God. That is the poorest job I've ever seen in my entire life.
Hey,
yeah.
What did you do? Did you just sweep it back and forth like that?
It was 5:30. It was 5:30 in the morning.
My mother in a muumuu could have done better than that.
Get the full scoop by checking out the archives at tastylive.com.
What is going on, everybody, and welcome back to today's segment. It's Thursday. Going to be touching on some things we talked about last Tuesday. We've got a lot of positions to talk about today, so we got some action to get into. But before we do that, Gus, my brother, how we doing today?
I'm doing great. You know, sometimes there are days where the market makes you think you should never trade again, and there are days where the market makes you think that you're Warren Buffett. And today I am the latter. It has been a fantastic day. Really a pretty simple one. I haven't done anything super complex, and I'm excited to dive in and talk about some of this stuff.
I think what you kind of just mentioned in that first opening line, I think we all can relate. You know, sometimes you put on a position and it feels like it's your first week of trading. You know, you might be a few years down, a decade in, but the market always kind of tests you and be like, oh, do I know what I'm doing? So I think we can all relate. But anyways, outside of that, how's the week been though? You know, I know it's Thursday. We got a day left. It was a shorter week in the market too, 4-day trading week. I'm not always fond of those, but outside of that, what's new? How are we doing today? And we'll go ahead and jump into this platform here.
Well, doing well. I am a little bit upset. I'll break the fourth wall here. I used the restroom right before I hopped on stream, and I got the bottom of my sleeve a little bit wet, and that's a very annoying sensation that I think everybody can relate to. So currently dealing with that. It's the bottom side too, so I'm dragging it around on the desk. Minor inconvenience for me.
We won't ask how that sleeve got wet, but we'll let everybody's imagination.
You don't gotta press me. You don't gotta press me, man. Sometimes sleeves just get wet, man. You know, you don't gotta know how we got to this point.
Whoever is hopping on next after you is gonna be like, let me wipe this table down real quick right here. But no, we can go ahead and jump into this platform. I have no gripes like that. I guess I have no bones to pick with. I mean, there's little annoying things. I think. Earlier this morning at around 6 a.m. smashed my finger putting one of the weights back on the rack. So I guess that's my gripe for the day. We'll start doing highs and lows. You heard of that before? Like
we should.
What was the high for the day? What was the low for the day? We'll kind of make that our thing. But anyways, it is Thursday, volatile market, pretty big sell-off in the morning, and then we've pretty much been rallying since. But a little toward the market. Market's almost, what do they call it? I think Dr. Jim uses unched on the day. Obviously, we closed down a little bit on the day. We had gap down and then that extreme sell-off. But if you were to look at the market this morning, I mean, we closed nowhere near the lows in the morning. We put the low in at about 35 minutes after market open, and we haven't seen any type of prices at those levels since. So QQQ is kind of doing its thing over here. Let's go ahead and pull up SPY as well. Obviously, two highly correlated assets, so they're going to look very similar. Down on the day a little bit. Let me go to this daily chart so we have a little bit of a larger view of what's going on. I've been getting a lot more hate on my candlesticks. I'm not going to lie. Dr. Jim wasn't vibing with it either. Apparently, it's too close in color. I can't remember if you said the same thing on Tuesday. But
I did say the same thing.
Okay. It's not a fan favorite, no doubt. But the volatility index still low relative to kind of where we've been and what I was kind of used to. I don't know if you have any thoughts on volatility, Gus, but I know we touched on it on Tuesday. There are still things to sell. Like I know you're going to bring up a few positions you put on today. So there is opportunity out there, but in the large scheme of things, volatility is sitting relatively low from what we're used to. And I really don't know what it is going to be to make the market budge. I would have thought, excuse me, the beginning of 2024, I know sometimes we like to talk about our predictions, and I did not expect the market to rally, all year. And I really don't have the expectation again into this next year, but so far it looks like that's what we're getting. And I mean, volatility seems like there's no fear in the market right now. But other than that, we'll just take a look through the positions. SPY, this one's still down a little bit. 29 days till expiration. Still got a little bit of time on this. Excuse me. 29 days till expiration, so we'll start managing this one by next week. I'm hoping by that time, some of that premium will start to come through. Some of that volatility will start to come through. But it's one of those where it's like, man, the market's moving down. Why am I not making money on this position? It was kind of the same thought process that I had during some of my first few weeks in the markets. Like, I would get the directional move, but my P&L, I was break even or even down a little bit on the position. So really just need some of that volatility to get sucked out of that contract, and then we should see a turnaround on that one, down a little bit. But again, we got a little bit of time. But as of now, the market is being very resilient. I've even noticed, even to the aggressive sell-offs that we've seen, like even like today, it kind of just seems that the market is very resilient. Even with an elevator down type move, we're always clawing our way back up. So I'm going to be mindful of that. And because of that, I don't know if I'm going to extend the duration of this SPY position yet. Like, even if I come around break, even if like, do I want to just add more time to it for the next cycle, or do I want to just take it off as a whole? Or maybe I could even just roll up and out a little bit more on a further strikeout if I can collect enough premium. But all that to just say the market's been really resilient. So that's been top of mind as well. QQQ, brother, I'm getting out of this pickle. We talked about it on Tuesday. Sold 2 call spreads that expire tomorrow. I'm running out of time here. But that down move this morning has helped. We've clawed our way all the way back up. So who knows if this is going to expire in the profit tomorrow? Because if we just taking a peek here, if we do rally again tomorrow, I could be sitting around break even, and all of that could be vanished in the matter of a few minutes in the market open tomorrow. So I'm going to be very mindful about that one. But again, I was in a little bit of a pickle. I mean, I had put this one on, and then the market rallied all day after I put it on. I think it was on Wednesday. Let me go back and see. It was one of these days, but I had put it on near a low, and then we rallied all the way back up. And then yesterday, I think on the second half of the trading day, we eventually started to sell off into the close, and then after hours last night, which made me a little bit more comfortable, opening the platform into this morning. And then we have some of the micros. Traded a little bit of the micros today. What exactly did I? Oh, after hours yesterday, or no, it was right before market close. I was on with Dr. Jim. Right after we had got off of that, I had sold a futures contract, and then I believe it was over. Maybe it was this morning. I believe I added one more to it, or maybe this was just the one contract. Let me double check. Obviously, a lot of these positions get very redundant. That's why I kind of lose track of what position was this again. Those are the micros. I think this was a single contract. Yesterday, we were talking a little bit about risk to reward and just being mindful about if you're trading directionally. And I brought up a graph. Maybe next week we can go over it. But it was just showing like the probabilities you would need if you were to be aiming for like a 1-to-1 risk to reward, or a 1-to-2 or 1-to-3, like what probability you would need on your trading performance to be able to at least break even. So obviously, if you're trading a 1-to-1, you're risking 1 unit to make 1 unit. You will break even at a 50% probability of profit. So it was kind of a diagram just breaking down what you would get from a 1-to-2, and then the probability, and then, so it kind of showed it on the X and Y axis. But that's why we had put this one on. The reason why I do like this trade, it's not anything to go on about, but something that you don't see is there's $40 worth of risk on this micro trade. So making 343 is nothing crazy, but with $40 worth of risk on a very directional product, I think is a really good trade opportunity to take, or at least risk your capital on. And that's how I see it. But that's where, that's where this micro position came in. And then I had taken it off today into that crazy sell-off that week. They kept selling off, and I was like, of course I just took this off, but I was like, I'll just take what I can get. And I'm happy I did that because, again, like I said about 3-4 times now, we've clawed our way all the way back up from the lows this morning. But that's the update that I got for you, brother. A lot of indices, a lot of futures contracts. Things are going really well, just taking it step by step, especially after a few green trades back to back. I'm going to really be mindful about not oversizing into the next trade, because one thing I did realize was trading in drawdown can be difficult, like mentally, but also after racking up a few wins, I've also noticed the psychology of handling those emotions. When you have a few, wins stacked under your belt, you're developing a little bit more of a cushion. I've recognized that can be very difficult to trade through as well. And I feel like we always talk about trading through drawdown and how that can be mentally tough. But, after stacking a few wins, it can be mentally tough to manage that as well. So I'm going to be mindful of that. If anything, I might even be using a smaller size into the next, week or tomorrow as we close off the week. But those are just a few things that's been top of mind for me. I don't know if you got any thoughts on that. And then also, I know you're going to be, taking us through what you've been looking at today. I know you had said you had thrown on quite a few positions today, so we can get into that.
Yeah, I have no shortage of new positions to discuss, but I absolutely agree with you. I think that in any sort of speculative market type context, it's difficult, obviously, when you have a continued losing streak to, try to continue to take things that are plus EV and, stay the course and trust the math and all those good things. But it can also be difficult when you have a winning streak, as Ariel just said. For me, the difficulty actually comes from wanting to overtrade. I'll do gambler's fallacy, or I guess suppose it's hot hand fallacy. Where I want to, I'm saying, I'm hot right now. I'm seeing everything super clearly. I need more, as opposed to stopping and taking my profits. But it can also be a problem on the other side, like what you said you struggle with, where it can be tough to manage and tough to, try to find new positions, not let things get conflated. Removing emotions on both sides of the spectrum is very important, and both sides bring their own set of challenges. Weird analogy I'll make is
what's that?
It frustrates the hell out of me when people who talk fitness like bodybuilding say that it's so much harder to cut than it is to bulk. I don't understand. Just eat more food. Really frustrates me. I'm someone that has trouble bulking. My natural state is to cut and not eat very much food. And so when I got all of a sudden up to 3,500, 4,000 calories a day, that is a challenge. And so similarly, when you're on a winning streak, everyone always talks about how it's a challenge when you're on a losing streak and it's so much harder. It can be just that hard when you're on a winning streak, and that's something to remember always.
And I mean, you have reached the correct target audience, because I'm in the same boat as you when it comes to that. As my stomach growls a little bit, and just thinking about how I didn't intake enough calories for the day already. So
I had a sandwich before I hopped on stream, because usually this stream I'll be hungry on this stream. This is like the first time where I've done this stream and eaten correctly throughout the day, so I'm happy about it. But yeah, it's challenging on both sides, but. Anyway, all right.
Actually, before we get into that, I just want to say, what's going on, Luis Salone, Grumpy Mike? What's going on, guys? Hope you're doing well. Good to see everybody. Good to see the family in the chat. But what do we got today, Gus? I know you were mentioning to me earlier you put on some new positions, so let us know what you're looking at.
Yes, quite the situation here. So first of all, the first thing I did today, which was amazing, is I managed to escape DraftKings with a profit overall. I was trapped in that position when we last talked on Tuesday and deciding how I wanted to move forward. We got enough. We got enough of a downward move today that I flipped back into the green, about $50 contract. So I got out of that one. Decided I didn't want to see it through. I didn't want to see if it gets below the 47.5 by the end of the week. And I had a pretty timely exit. It was right about where the market turned over, and that's going to be a trend for all of these trades that I'm about to list. I happen to everything. I mean, for the most part, everything I'm about to describe happened between 10 and 11 a.m. Central today, which was kind of the bottom. So that certainly helped most of my sentiments here, at least in the micro.
This was the I remember you touching on I almost said Donkey Kong because the ticker's TKNG. DraftKings. I remember you touching on that. I remember us talking about, you might have some time to get out of it. So I'm glad you did today. But was that the earnings trade? Was that what it was?
Yes. That was a bearish earnings trade that did not seem like it was going to pan out. And we managed to get 3 straight red days and bring me back into the green on that position. Nice. So fortunate there. The second thing I did today was I grabbed, everybody's always talking about these in chat. I'm sure that I think Mike likes them. I took a SPY, just a short put, 60 days to expiration. I'm trying this, guys. I know.
Is it like a longer view?
It's just that there's just a general. I have general bullish sentiment regarding the market. My strike is 605, so above 605. Come April 17th, I'll get max profit on these. Expensive, $10.08 a contract.
You sold the put.
Yes, I sold I sold a put. It's a $1,000 contract, so it was a bit steep, but. That's up nicely right now, just under $100, almost 10% on that position already. It's something that I know Rob H. and Mike like to do is just constantly have 60-day SPY or SPX short puts and exit them at 21 days to expiration roughly. And there's been lots of chatter about that recently, so I decided I'm going to try it for myself. Got one of those on. After that, I played an Iron Condor on waste management. I sold WM. Yeah.
WM.
I sold the 220 and the 250, and I bought the 210 and the 260. So 220 to 250 is my ideal range here. Currently trading at, what's that, 229, right in the middle. And my strikes are reflective of my sentiment here. 220 is my bottom side. Waste management is a stock I like a lot in general. Sidebar. It does really well every year, and America is only ever producing more trash. And even as we get greener and switch to recycling, they do that too. So I'm high on waste management. They have good contracts with all these cities. But my sentiment is generally bullish, but this thing doesn't tend to make any cataclysmic moves. It's 29 days to expiration, March 21st. And 92 cents a contract is what I paid. I bought 4 of them. And I'm just trying to, stay inside this 220 to 250 range. I do think we will, good lines. I think that we will generally continue to work up, but I don't think that there's any way we have $20 of upside in the next month.
I mean, goodness, great off this run that it just had. Another $20 to the upside would be massive.
Yes, exactly. There's no earnings in this window either, so there should be no major catalysts. And this is just a nice, boring, sound company that adds a little bit. I don't see any reason that there would be any groundbreaking news that could totally tank this or anything. I think that's a good trade. 67% probability of profit, I believe, and I think it's a little higher than that personally. Then I did some shares. That
was an iron condor, correct?
Yes.
Wow, that's a pretty high probability of profit for an iron condor.
Yeah, I mean it's just a slow mover. Let me fact check myself. 69 right now. Nice. Nice.
That's great. Yeah.
But yeah, no, it's nice. It's just a low vol.
My bad, 69%. Nice. Flat ball for the air. Right.
But yeah, it's just it's a nice slow mover, low vol, nothing to really scare me off. So I'm liking those.
Right.
Additionally, I added some shares off these dips. Walmart and Costco chief among them. I took a pretty sizable position on Walmart with some shares. Shares aren't something that typically gets done too often on this show, but I felt like it presented a good buy spot. It's a nice little brain dead trade. Walmart is a very strong company. I have no doubt that they're going to recover out of this. They continue to compete with Amazon. What's up?
Yeah, that's exactly actually what I was going to bring up next. I think I'd see some headlines over the last week or two about Amazon starting to potentially producing more revenue than Walmart, which has been the big dog in the retail space. What are your thoughts on Amazon? Just a little bit of speculation for the next, 5-10 years, just for the future of these companies. What are your thoughts on that? You think Amazon's going to take the cake when it's all said and done?
Certainly. I think that they have too much existing infrastructure, and they also have just more room to expand into different avenues than Walmart does. I know Amazon has started dabbling with cars recently. Not to mention all of their subsidiary holdings. They own Whole Foods. I mean, they have their foot in groceries and automobiles. And they just continue to add offerings. Honestly, the service just continues to improve. Since moving to Chicago, I've been amazed with how many things can get same day to me. If I order something at 10 a.m., it's at my door at 5 p.m.
Right. What is that? You have is there like an HQ close to you? Maybe HQ is not the right word, but
yeah,
maybe
a DC. Yeah, there's a distribution center like I don't know, somewhere right around here. So yeah, anytime you happen to be ordering,
Amazon or Walmart. What did you say again?
Amazon.
Okay, I've ordered something from Amazon in the morning and I've received it at the nighttime before. Same day, less than 24 hours.
That's what I'm saying. Yeah, like a lot of stuff, I'll go to order it, and if it's before 10 a.m., like 5 p.m. same day will be the earliest delivery. Like it's not even super late at night. And I know Walmart can't match that type of infrastructure, and that happens to my parents too back in Houston. I know it's not just a me thing.
No, I mean that's going to be tough to compete with. I think these companies are always looking to find convenience, and I think consumers, we always look for what is most convenient and less resistance. And I mean, getting your package same day, that's going to be tough to compete with.
Well, yeah, especially when I can order it, come to work, go home, and it's there.
Right.
It's like I couldn't have shopped in that time, and now I can. Right. So yeah, there's great value to that, and I don't know that Walmart's necessarily going to be able to keep up in the macro. Because Amazon just has so much existing infrastructure already too. They have all these DCs; they're already in place. They own all of their cars or their delivery trucks, vans. They own. They scaled.
They scaled quick too. They scaled far and quick.
And I like what they're doing too with this. They're hopping into abandoned malls now. Like they'll just buy an abandoned mall and make it an Amazon DC.
Use it as a warehouse.
Yeah, use it as like a big warehouse DC sort of situation. And yeah, I'm a fan of that too because malls are dead. that's another.
Big dead. Malls in middle school were like the spot.
Oh yeah, yeah. It was it was like the thing. If you got a $20 bill and got to go to the mall, you were you were living life. And now
what you get for $20 nowadays at the mall?
Oh man, I don't know. A high five, maybe. I don't know.
No, that's why we have things like if you got $20, you go to the mall. What is it called? That one was it Affirm? I think Affirm was like the buy now, pay later.
Yeah.
Those services got to be rocketing in these next few years with inflation, with the cost of things. Buy now, pay later. Those companies know what they're doing.
Oh, absolutely. And with Gen Z especially, we have, and Gen Alpha after us, maybe even worse, there is very much a desire for instant gratification and dopamine right now, even to the extent of not waiting until Friday to get your paycheck. I want something now and it's Wednesday. So yeah, I'm really high on those BNPL services. I think that's all going to go crazy. I have some significant holdings of Affirm in my personal portfolio.
I got you.
Which
he's an advocate. He's an advocate of Affirm.
I'm not an advocate. I think that they're detrimental to society. But from a financial,
he's an advocate.
From
he's
a financial perspective, yeah.
No, I hear you. Eating some Dr. Jim gives you kind of about the colors of your charts. Somebody said slides look like Easter Bunny puked on Halloween. Hey man, as long as my charts look a little bit better and a little bit more in unison with colors and I'm colorblind, I'll take it. But Lone also does say, I'm telling you, Walmart is much better than Amazon now. I don't know if it was you and I, Gus, last Tuesday. We talked about the online shopping experience with Walmart and how well-tuned, I guess you could say, they kind of have it right now. Was that your experience? I think you were the one telling us that.
Yeah, they've kept up with Amazon. They've basically just jacked Amazon's entire business model. And I certainly think that they're going to stay viable. I don't think that Walmart is going anywhere, and I think that they will continue to be successful. But in a macro context, I do see Amazon passing them. It's
definitely.
I mean, especially...
What is it, the amount of capital? Like, is it the amount of capital? Why is Amazon able to scale past Walmart in such a short time frame? Is it the capital?
I think it might be like... I mean, to me, I've always rationalized it as it might just be like less corporate BS going on. Like Bezos can kind of just say, I want to do this and it's done. Walmart probably has a more decisive chain of command and there's more, bureaucratic stuff for red tape for things to get tied up in. So perhaps that's part of the angle is that Bezos kind of has a Musk sort of thing where he's just like, this sounds cool. Let's do it.
That's a big ship, and he's able to turn the sales on that thing quicker than I would have thought for such a massive company,
Yeah, it's amazing. And Whole Foods too, the Whole Foods grocery delivery. My mom uses the heck out of that. If you shop at Whole Foods, check out and see if they'll deliver to you, because if you're a Prime member, it's like, I think it's the same as Prime. I don't know if there's a fee. It's like that your groceries just show up better than Instacart, obviously. So that's a thing as well.
Interesting.
All right, what else here?
Yeah, that's court. Grumpy Mike said we could get a pretzel at the food court for $20. I think he's right. He's right on that. They still might be 20. Yeah, Auntie Anne's.
A little Auntie Anne's action. That's good. I had some Auntie Anne's in an airport not long ago. It was tasty.
Just scrape a little bit of the salt off and you're good to go.
Yeah, I like the cinnamon sugar ones, like the nuggets. That's good stuff.
Oh, it's like fire. What else you got in there, Gus?
Okay, I also added shares of Costco just on Walmart sentiment, and I should say one share. Holy cow, they need to split. And then Goldman Sachs, I bought some shares. Sachs? I don't know what's correct there.
Goldman Sachs, I believe that's
Sachs. All right.
Right.
All right. Copy
is it good for Jim? That's kind of where I'm at there.
That's
it's like
true.
Good for Jim. I don't know. I only say that in my head. I never say it out loud.
Yeah, maybe I'm just from Boston and it sucks. I don't know. Anyway, added some shares there. This is an interesting move. Banks were getting killed today. Morgan Stanley has a fairly sizable lawsuit pending against them for taking too much risk. And Goldman moved down with it, but they're not getting sued. So I decided I would grab some Goldman shares.
Sector risk.
Yeah, I mean sector risk, and I'm understanding the broader sentiment, but it's too nice of a dip for me to not jump in here. I posted it in the follow page 635.66, and we're currently at 642, so already doing okay on that position.
What is that, a vertical spread?
No, shares. That's also shares.
Oh, sorry. Right.
And then getting into some more advanced fun stuff. Let's see. I grabbed a short put vertical on Amazon. I am finally getting bullish on Amazon. I feel like this is the buy spot here. That's already up a little bit from close, but yeah, it was getting down near 220. There's really strong resistance in this like 217, 218 range over the past 3 months. So I don't think there's much more room for it to move lower. And coming off the dip in the broader market, it just seemed like a good time to try a vertical there. So I I sold the 220. I bought the 217. So we just need to stay above 220 for 15 days, March 7th. So I'm not particularly concerned about that. 220, pretty strong resistance. I think that should pan out all right. I grabbed, what else did I do? Oh, some IBIT. I took a short put vertical on IBIT as well, the Bitcoin ETF. This is reflecting my broader sentiment regarding crypto, which is not something that I keep up with a particularly large amount, I must admit. But I check the BTC USD chart every day, and I noticed that we're kind of recovering nicely out of the valley that formed. I am bullish on crypto in general, especially under this administration, and so I sold the 54.5, bought the 54 on that one, very cheap, 18 cents each. Bought 5 of them. But yeah, pretty small position there, just trying to catch some upside on that. And then my last trade, and perhaps the most interesting, is I bought 12 shares of CCK, Crown Capital Holdings, or something like that. This is based on I saw Congress trading this. There's a guy, a rep from New Jersey, former governor of New Jersey, who bought some of this at the very bottom of that recent dip that you're seeing there, like late January. Right. He's up 10% on that position already, and he just loaded more shares today. So I don't know what's going on, but I'm tailing. That's my sentiment on that.
Don't care. Give me the probabilities, and we'll call it a day.
Absolutely. I'm getting a spam call. One moment. Probabilities. Yeah, I got everything. Is
CCK Holdings is calling, bro.
Yeah, everything is north of 50. CCK is just going to say 50% because that's shares as well. I'm not playing anything crazy on that. But Amazon, 62%. Waste Management, 69, as we mentioned. 65 on the SPY. Is that a leap? Is 60 days a leap? It gets into leap territory. And 62% on my IBIT. And additionally, I tailed Katie on a target short put vertical as well.
Shorting target. Do not let.
No, long target.
Oh, long target.
Yeah,
Gotcha.
Yeah. Long target.
So that's a little controversial in this generation. I mean, Target is like, I could ask, hey, you want to go to I guess that's the new mall. So
Target is kind of the new mall. That is where you just go walk around, and you can get a pretzel there. So yeah, maybe you're
I got asked over the weekend, do you want to go to Target? I said Target. I said I don't need anything from Target. What are we doing at Target?
Smell some candles. Yeah.
Some candles. I did. That's so funny. I ended up going this week and I bought a candle. That's exactly what happened.
that's how it goes.
Right over there.
That's how it
goes. Before we wrap here, though, any thoughts on PLTR? I know this one was having a massive move up. This is another one I've even just seen on social media again a lot over the last 24, 48 hours. A lot of people longing it to the upside. A lot of people taking advantage of the volatility to the downside. But this one's been absolutely popping off. Again, I think PLTR was one of the first underlines that I ever traded options on. But it's doing its thing. Some big moves here.
Yeah, I mean, what the hell do you even make of this company? I don't know. Am I surprised by a sharp downward move out of a company trading at 400 times its valuation? No. But, also, I understand why people are still bullish. I don't know. I think PLTR, we've entered the Wall Street bets zone where I don't know if there's any amount of push that can make this vertical line go even more vertical. I think that it has to come down for a little bit for the health of, and that is healthy for the stock to have a brief, cooling period before we go up again. So my short answer is I don't doubt it will get pushed way up again on a rocket ship sometime. But I think in the next week or so, we may continue to see some downward action.
Yeah, of course. I mean, we were trading at $20, back in August, back in, summertime. I mean, this thing has absolutely taken off.
AppLovin did the same chart pattern today as well.
AppLovin.
APP.
You said AppLovin?
Yeah, ticker APP. It's
Let's check that out real quick.
This has been a darling as well. It was up 650% on the year before the fall off today. They do. I'm still not entirely sure what they do. I think they help people get apps out. But this is a poppin' company right now as well.
Most definitely. Anything else to add before we head out of here today, Gus?
No, I think I've done enough yapping. Don't be afraid to buy shares. How about that? Shares work.
That was the lesson of the day. That was even if it's just 12 shares, right? I think you got 12 shares or something.
Yeah, 12. I got 1 and 2 of some things, but I mean, if you know an upward move is coming and you don't know when, you don't always have to put yourself on a calendar. Shares never hurt. So that's my soapbox for the day.
Love that. We'll see. Anybody else goes to Target over the next few days, let us know when we come back around into next week. But that's going to do it. There's a little tour to market. Got some new positions on today. Gus and I will come back, manage our positions again as next week. We got some more fun ideas coming as well. So make sure you stay tuned, catch back up with us, and we'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Oh, yeah. Tasty Nation, good morning.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Move with the rhythm, shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Oh, yeah. Tasty Nation, good morning.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, yeah, it is Thursday, February 20th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And good golly, Miss Molly, do we have a lot of incentives to sift through, and a lot of people trying to govern the world. More on that later. We should say what's up to the people. Shout out to everybody watching on tastylive.com. as well as all of you watching on Tasty Trade desktop and mobile applications. If you don't already have both, what are you doing with your life? Go get them. But if you want to be part of the Bing conversation that shows up here, oh, we did it. Nice job. If you want to be part of that conversation, get your screen name and comments, both appropriate and inappropriate, on the screen. There's only one place to do it, and that's on the evil Google YouTubes. So head on over there, type in Tasty Live, find the channel, and get those phalanges and metacarpals moving. Tell us whether you made money, whether you lost money, what you bought today, what you sold. It doesn't even matter if you say anything coherent. Type in random ass characters. As long as you're typing, you will spoof the Google algorithm into thinking this place is rocking, and they'll put us in front of more people. And we can grow this community one view at a time and save the world one view at a time. Speaking of the people, we should say what's up to the people. Shout out to everybody that's already in the chat. I see all of you. Vic better be on today. Absolute Beginner, Lone, Brian Watson, how are you? Grumpy Mike, what is up? Catan, how are you? Victoria, good morning or evening, depending on where any of you are in the world. It's morning here. Jay, what's going on? What up, Big Perm? What up, Big Perm? I mean, Big Worm, Douglas Smiley, Cato, Forbet, German, FMJ, D-Chat, what's up? I would continue to shout you out, but I'm contractually obligated to speak of things with some sort of substance. Otherwise, I would. But thank you, all of you, for choosing to spend some time with us this evening or morning, again, depending on where you are. Let's get down to it. S&P 500, 6135. Still hanging out at the top end of this range, people. You know what I mean? I'm not much of a technician anymore, but I would guess if I were to look at like some Bollinger Bands or something like that, I'm guessing they're pretty tight. You know, they say when the Bollinger Bands come in, you get a Bollinger Band squeeze, that's the market coiling for a breakout. I don't know how much I believe that, but I've got to imagine we're just sitting here at the top end of this range. Either it's time for a new leg higher or this rally's exhausted. I know that's not the most helpful analysis. I'll give you my thoughts on direction in a bit. S&P 500 down 0.2%. The NASDAQ down about 0.5% today. The Dow Jones down a full percent. It was the ugly redheaded stepchild of the bunch. And the Russell down 0.9%. Catan, Exxon down, Palantir rebounds. That's what I talked about this morning. I guess let's get there first before the indices. Indices were kind of a boring day. It was way more interesting what was happening sort of under the surface, so to speak. But I think this morning I had a segment with Tom. It was your morning. It was yesterday evening for me. This morning I had a segment with Tom, and I brought up Palantir. And my question was, like, going into the open this morning, Palantir was 102. Ivy rank was 77, near 80. Individual implied volatility was near 70. And you could sell effectively, if you look at this nasty little gap, okay? if you're wanting to get long here, you're probably terrified of Palantir going and filling that gap. And you could sell like the 75 puts for like $1.50. Get like $1.25 for the 67.5 puts. This is on the open, mind you. So my question to Tom, who's been sort of bearish on Palantir, which makes sense. I mean, the price of sales in Palantir is like 600 to 1 or something like that. It's insane. It doesn't, the valuations on Palantir, let's just say they're not attractive right now. But if something falls 15%, which Palantir did, and I suppose if you haven't been following Palantir, the reasons for that probably twofold. The CEO, Alex Karp, did a registration. They effectively registered to sell up to 10 million additional shares inside the next 6 months. So there's the potential dilution of existing stockholders, which the market will discount ahead of time. Because, I think they have about 2.2 billion shares outstanding, and they're saying we could issue 10 million new shares, which would dilute some of the existing 2.2 billion outstanding shares. I don't know how much of those part of the free float, but I just know they have 2.2 billion outstanding. So that dilution is part of the negative weight of the stock. And then also, I think on some of these confirmations of Trump's appointees, I think Pete Hegseth has said the Department of Defense, they're looking to slim their budget, which is currently $850 billion, by, what was it? It was 8%, I think, over the next 8% per year. So to decrease the budget by 8% per year over the next 5 years, which means less slush fund money coming out of the Department of Defense. I think that's how the market interpreted that. And 40% of Palantir's current earnings comes from government contracts. U.S. defense, actually, I think. And so because of that, so less slush money coming out of the U.S. government, coupled with the idea of potential dilution of existing shareholder equity over the next 6 months, that was enough to sort of prick the upward momentum, and you probably get that, some pile-on effect to the downside. And my question this morning, because Vol actually did not contract on the open, as I thought it was very possible. It actually expanded, and we got a pretty nasty little move to the downside into the mid-90s. And so my question at the open this morning was, is it a good time to look to sell some out of the money puts here below this gap? Is it sort of an interesting risk reward? That was my point of view. Stock is still down 5% from yesterday's close, but it is up from, I think, where we opened at 102. It's up $4. So like just under 4%. So it was a decent move when we talked about it. I don't know. Maybe it still could. I think the vols come in a bit. Let us see here. I believe the vol has come in just a bit. Where is it? Yeah. IV rank 70, individual IV 72. No, it has not. So we still closed elevated. The tough part about this, man, is I saw this happen with a handful of stocks in the past. So if you're going to sell something, you got to want to own this. And if you do not want to own it, I'm not recommending anything, but I'll tell you what I would do. If I want to try to take advantage of some of this implied vol, maybe I'm selling. Oh man, you can't get as good prices, obviously, with $4 higher, but maybe I'm selling the 75s, maybe the 77.5s. Maybe I'm selling these, but I'm probably going to buy some cheap 50-cent option behind it. So I'm probably going to sell something for $1.50, buy something for 50 cents if I really don't want it. And now you're probably going to make $1 and risk $9, but at least your downside is capped. And if something really nasty happens in Palantir, you're not wearing something you don't want. You're not forced into these really weird decisions. Like I see this all the time. You sell puts on something, you don't really want to own it. You get an outlier move to the downside, which is totally possible in Palantir right now. I mean, case in point, 125 to 95 over 2 days. You don't see that coming. And now you're sort of cuddled up in a fetal position under the desk going, what do I do? What do I do? What do I do? And I think if you account for that scenario up front and you minimize the potential pain and pressure you put yourself in, you'll sleep a little bit better at night. So if you know you don't want to own it, maybe you buy some, you sell a $1.50 option, you buy a 50-cent option behind it, and you minimize that potential. If you do want to own it, and buying 100 shares at 75, even if it cut down to 60, if that wouldn't bother you or change your vacation plans in the next 6 months, then maybe you sort of have an interesting level here. But a lot of this, it just, the problem with this hand is the market could have aces or it could have 7 deuce. And they play, the market's playing the hand where you can't tell. Meaning a lot of this stuff is starting to get poked, right? Palantir has been one of the biggest momentum stocks to the upside. I know NVIDIA's recovered a bit, but that the DeepSeek thing kind of sort of poked the momentum out of the upside of that AI narrative for a little bit. Walmart's coming in telling you that not so great things about the economy, and also telling you that the people trading down into their stores are people who are making $100,000 or more. Imagine that. Imagine that, my friends. A world, can you imagine that maybe 5 or 10 years ago? A world where you made 150 grand, and that was you were trading down to buy your groceries in that world. Wild. But anyway, so my quick thoughts on Palantir. I think it's sort of an interesting put selling moment, not because I think you're getting a good valuation, and honestly, the pot odds tomorrow aren't as good as the pot odds today. After something gets cut by 15%, that's a really interesting moment to look to sell puts. When it rallies basically 4%, not as much, which is why I would mind this gap here. This little gap between 80 and 100, 82 and 100, I would mind that gap and be comfortable if we fill it. Or just be patient. The tough thing about Palantir is, like, if you were patient, this thing basically, we were up 300% last year. It was up 340% 2024. And almost 170% in 2023. So being patient has probably caused FOMO for a lot of people in Palantir. But I know this is heavily retail owned. So I think in those cases, you got to fight the FOMO and look for decent entry spots if you don't already have exposure to this thing. Advice from a person who's been burned trying to chase stuff too many times. I'd rather watch other people make money on stuff than get burned chasing it now. And those are calluses that were developed over years. The other thing I brought up this morning, which I'll quickly bring up here today, just because I'm feeling like talking about being a little bit more actionable today. But Moderna was down 6%. It was the first day since RFK's confirmation that you're starting to get a discount in stock again. We were up, 3-4 straight sessions in a row. February 13th, he was officially confirmed, and you got a 3-day rally in the stock. Go figure. I know this sounds crazy, but I think it's going to be really hard. I think it's going to be really hard for the administration to shock healthcare investors at this point. I do not mean that there's not downside, but what I mean is the marketplace just took the last 4 to 6 months discounting all these stocks. Look at Eli Lilly over the last couple of weeks. I think whatever discounting the market needed to do, however offsides the market was on a lot of these healthcare stocks headed into an RFK appointment, that has likely been discounted to the extent it can be discounted. That doesn't mean new announcements, programs, or policies aren't going to have downside impact on these stocks. It means they're just probably more appropriately priced to be able to stomach those announcements, right? Maybe you get a 2% move instead of what would have been a 10 or 15% move. So I've said this before. I said this coming into the year. I'll say it again. There's nothing about me that wants to be a healthcare investor. There's nothing about me that sort of like my moral compass says that these are like shining beacons of ethical behavior. That's not where I'm at with this. I think you're probably getting a more decent risk to reward on a lot of these unloved names than anything else. And anyone who's watched this show or at least watched me talk for a while knows that's kind of my thing. I'm not the momentum guy. I'm the guy who goes and looks for pet rocks, the stocks that are laying on the ground that nobody wants to play with, and wonders. I wonder if they're going to want this in the next 6 months, 1 year, 2 years. If the answer is maybe, and they give me a decent price, and that's the stuff I start buying. So, like, am I interested in getting in line for Moderna's product? I am not. However, I think that's probably why it's a $30 stock instead of a $180 stock. It doesn't mean the cheap stocks can't get cheaper, but I do think you're getting interested in risk reward, and that goes for Moderna, probably goes for Pfizer. Eli Lilly never really got that cheap to begin with, but there's a handful of these things. XLY, interestingly enough, is not showing, or excuse me, not XLY, Victor. Come on, use your brain. Sorry, I got a little brain fog still. XLV is not showing the same thing that a lot of these healthcare companies are showing. If you were to just look at XLV, it's showing a very different picture. A lot of that having to do with the weighting of Eli Lilly and others. Catan saying, or Brian Watson saying 100,000 is poverty in big cities, which is wild. Absolutely wild. One of the things that I'm into, I don't say I'm into, it's part of my algorithm on YouTube, is like the tiny apartment, like taking tours of people's tiny apartments. I don't know why, but like there's these, people show off their shoebox apartments in New York City that they're renting for like $600 or something like that you can't move in, or sometimes Tokyo or Hong Kong. I don't know why I'm fascinated with these things, but I am fascinated with watching those. And there's some part of me that thinks that if you've traveled a lot, then you can see how people live in Hong Kong, how people live in Tokyo, the living spaces, how people live in Singapore, and how that compares to how people live in America. And I think the space that human beings, or like the Philippines, like the space that human beings can live in is mind-blowing. Not only the place they can, the place they will live in. And some part of me just thinks like, if the average square foot of a single-family home in America was pre-pandemic 2,000 square feet, or I think 1,500, something like this, you can cut that in half, and that would still be a giant place compared to, on a relative basis, to some places in the world. And but I also think to myself, well, there's no room to cut in Tokyo or in Hong Kong or in the Philippines. You're laying in this place. Americans, we have room to cut. We don't want to, and I don't want people to have to, but we probably do have room to cut. Go smaller, build more tiny homes, build more smaller apartments, build more studio apartments. That's probably the world we're headed to. We'll get a ton of supply of like much smaller places, I think. That's the only way you can solve these problems. The only way you can do this is either you extend the debt out to longer maturity. So instead of a 15, 30-year mortgage, you're buying, 50-year mortgages, or you make the places smaller so that they're more affordable, or we go through a recession, deep recession, so that those prices come down, and somehow you maintain your leverage over your wages so that your wages don't compress as much as the home prices come down. Somehow that's got to happen as well. Which one of those three flavors would you take? Longer maturity on mortgages, smaller places, or a deep, painful recession? A, B, or C? What say you, chat? I'm kind of curious. Those probably aren't the only three options. You can create more growth, and that growth can be disproportionately distributed to labor so that their wages can go up as a percentage of the price of a home. That could happen. It hasn't happened. It almost never happens. Those gains go to the shareholders instead of the laborers. But it could happen in theory. But because it's such a low probability outcome, I'm not including it. So A, B, or C? Ben says deep recession, please. So did Cato. By the way, if your answer is C, that's why you watch this show. Brian Watts is a smaller place. I think that's the least painful outcome, and I think that's likely what's on the horizon, my friends. That's why it sort of pisses me off a little bit. I wish we had, like I'm going to say the 1950, 1960 model, but it might be like the 1980s. The 1980s model of capitalism. I wish like Boxable, which is sort of this prefabrication tiny homes. And they're basically a startup, but they're private. And so you can invest as a private placement, but you can't invest in the market right now. There's not a really clean way. I've looked into this. There's not a really clean way of investing on the public markets in tiny homes. You can get exposure in some of these home builders that have some portion of the business where they will build or sell smaller homes, but there's no clean, direct way to do it. Because all the companies that are doing it are still private and likely won't go public until they've already until the investment, probably like the easy money has been made, if there is any easy money to be made in that space. Tell me if I'm wrong. If you've got a clean, direct way of investing in sort of the tiny home or prefab tiny home movement, let me know. Let's see what else you guys are saying. C. Katan says, we are all masochists. C. Short-term pain equals long-term gain. Victor, let's all short the DC real estate market. You guys are wild. I didn't expect all of you to go for like the most painful option. And you know what? I kind of want that too. I want it. And I want it only, I'm curious of the people that went for C, which is the deep, painful recession. I wonder, do you guys have kids? Because I think if I didn't have kids, I don't want the pain. See, let the next generation deal with it. That's what previous generation kicked the cans onto us. They borrowed and spent all of our tax dollars. So now we're paying for things that have already been spent. And then by by further deficit spending, we're basically spending our children's future tax dollars. And when you think about it in those terms, you go, I don't want to do that. I'll live without so that later generations can live with. And so I'm guessing most parents, if you kind of see through the matrix into what has been happening, you want it all to end. And you want to take the pain so that your kids have a chance of sort of living in a more normal world. And people don't understand that. They call you a perma-bear. They call you impractical. A lot of people in that scenario, you'll advocate sort of libertarian policies because that would bring about the change that you're sort of seeking. But you're the most misunderstood person. People are not cheerleading. They're not cheering for people to lose their jobs or lose their homes or lose their comfort or standards of living. That's not what they're cheering. Most bears, actually, I would say. Most bears are not cheering on negative outcomes for people. But I say that my wife and I have these talks all the time about sacrificing in the short term for what's the best long-term outcome. And sometimes being able to see the forest through the trees and say, this is the best long-term outcome means I give up what would seem like the best short-term outcome. And I think sort of bears, not all bears, like Tom's very different, right? But like I think bears that want sort of that deep pain, they want the best long-term outcome. They want this train ride, the American free market capitalist hegemony to last a long period of time instead of ceding the standard of living that we currently have onto, some other population. And I think that's what they're misunderstood. Anyway, sorry about that. D-Chat says, or Catan says, yes, you've got kids. See, I pegged you. Lincoln says, Boxable is a scam. How so? Tell me why. A guy in my area is building tiny homes on trailers, 200 square foot for $400,000. That's not possible. No way. I wonder if he's ever heard of RVs. A tiny home on a trailer is a trailer. I don't get it. And $400,000 is insane. This person's going to lose all their money. That's the average price of a home. Depending on where you live, I guess. D-Chat says, kids are out of the house, but people need to learn the markets can't be manipulated forever. They can. They are manipulated and have been manipulated. But it's the degree. There's only, the ride only lasts so long. And the more you steal from the future, the more you bring that future outcome into the present. I mean, that's the theoretical. That's what I believe. I want to create generational wealth so my kids can do the same. Larry, see, that's the other part. So the other part of the people who want the pain are the opportunists. You're probably in a decent place financially. You probably don't live a consumerist lifestyle, so a big change in the economy is not really going to have a big impact on you. And you would be looking for, whether, businesses to buy at lower prices, streams of income to buy at lower prices, whether it's real estate or business. I think, I understand that. I understand that way of looking at the world. That's not all bears, though. You're who they are talking about when they say you're cheering for the pain. They're talking about you. Nothing wrong with it, Larry. I'm just joking. Thanks for the answer. Rented a lot at the farm for a young couple to start with a tiny home. Oh, rented a lot at the farm for a young couple to start with a tiny home. Guy was a worker, raised his newborn 2 years in, and now they're thriving. They put off for a few years and made it work. It's the way to go, man. Beautiful story. Relate more to you, Vic, than anyone else I know. I appreciate you. Zero expiration. The thing is, I get it. I get how you guys think, because I think the same way. Boxable can only build 2 units per day. The waiting list is over 5,000. All right. That doesn't mean it's a scam, though. Right, Lincoln? I thought you were going to tell me, like, the houses are all made of, lead and asbestos. But I think this is actually maybe a good point. The point is, Lincoln, they're in a business cycle, right? They're before what's called the S curve. That's where Tesla was. When they were flirting with bankruptcy, they were figuring out, how do I go from because that model only works, Lincoln, if you can do it at scale. So you have a proof of concept, you have a willing buyer in demand, but you must figure out how to build the efficiencies in production. And you have to go through that painful S curve, and not everybody figures that part out. So the risk in an investment in Boxable is that they figure out how to go from 2 units a day and a waiting list of 5,000 to figuring out how, because that whole model is scale. How do they go from that to finding scalable, efficient, quality production? And I don't know if it's a scam so much as they haven't figured that part out. And that's why I would, in theory, I'm not saying I'm trying to go do this. I'm just giving an example. In theory, that's why you want to be an early investor, because you're betting on the idea that if they figure out the S curve, that your reward will be some multiple of your upfront investment. And of course, there's a high probability they don't, and the money just goes out the window. But because there is no guaranteed thing, it would be impossible for them to have an interesting concept and have already proved their manufacturing, their ability to scale, and some ability to invest at a very low valuation. If they had already proven the model, then their valuation would be dumb high already. That's kind of the point. It's on a trailer to get around building codes. Oh, okay. Larry, where is it? Now you got me curious. Now I think I might buy a $400,000 home on wheels. If you can move it with a truck, it's a mobile home, which have historically been bad investment. Yeah, but it seems like what we're talking about here is an actual home. So the question is, if you put what would have been a single family home on some wheels, does it depreciate or appreciate? Because the mobile home depreciates. It's a depreciating asset over time. Oh, that's kind of an interesting question. It's like is a hot dog a sandwich? I don't know why that was so funny to me. I just think it was kind of clever. All right. I envision the future just like those Mad Max movies. I don't think it can't go that direction. Unless the population gets mad docile, it can't go there. I always think, all right, this is going to be one of those episodes. I always wonder. I think the testosterone of males has gone down at an annual rate at 2% per annum. So 2% per year over like the last 50 years. I'm fascinated by that. I haven't said it was 1%, but I think it accelerated, or I think they got new test results and then it ended up it being 2%, I think a couple of years ago. I'm fascinated by that. Why do you think that is? That's not trading related in any way, shape, or form. I'm sorry, I can't link that back to the markets in any way, but I'm curious Why do you think the testosterone levels of males, and this is global, by the way, this is not a U.S. phenomenon. This is a global phenomenon in almost all places. I think there are a few outliers, but in almost all places, testosterone in males has gone down at an annual pace of 2% per year for like the last 50 years. Why do you think that is? Aluminum hats on, pencils up. Larry says, you have me pegged. I wish everyone could get themselves to my point. I enjoyed the pain so I can be here and want better for my kids. I get it, Larry. Amen. I'll read a couple more and then I'll get on with some more, I don't know, whatever we do here, analysis, I suppose. Own the park, not the mobile home. Yeah. Some of those park owners are ruthless, though. I suppose you'd have to be. I would never want to be a mobile park owner. That's hard. That's really hard. You know, especially over the pandemic, to have to like jack up rent, on potential people in difficult circumstances. I don't know. I couldn't do it. A hot dog is a taco, 3 sides. Grumpy says, blame the microplastics. I think it's multi-factor, but I agree with you. Most guys in the 200 or 300s, living zombies. I think you're saying the testosterone level in the 200 to 300. Yeah. Ouch, Victoria, very ouch. Don't exercise, then low T. If I visit Singapore, can we hang out for a coffee or lunch? Says German. Yes, 100%. But if you're going to, send me an email victor.jones@tastylive.com or send me a tweet, but make sure you get my phone number. Because I think one person was coming through here, and we were just communicating on Twitter, which I don't like. I might go a day or two without checking Twitter or my DMs. So just if you're gonna do something like that, ping me, and then I'll give you my phone number. We communicate there, so we make sure we get 100% win rate of meeting up. Going from physical labor jobs to office jobs. So you guys have a mix of, I don't think you're hitting the main one though. I think there's a mix of environmental factors. So no exercise is basically what you guys are saying. And zero expiration says declining. Oh, by the way, I can make this investment related. Here's where it's investment related. This is why I own HIMS. Look at that beautiful chart. Look at that thing. How gorgeous. Anyways, this is why I own HIMS, and I own the flip side. Oh God, now I can't remember it. It's basically like some IVF treatment. So the investing thesis was at the time that it's a mixture of lifestyle. So the jobs that we take on. It's also sort of a mixture of the proliferation of social media. I think social media allows our brain to see these constant hits of dopamine, and in various ways, read between the lines. And so that sort of minimizes their sort of motivational factor to get out there and do things that would be required to find a mate. So the birth rate is going down. I think that is a output of lower T. And then I think it's the food, bro. think a lot of this is the food. Yeah, microplastics has been found in, like, you know, male testicles. Can I say that on this show? I feel like they're going to throw me off this show any day now. But I think that's part of it. And then, but I think it's the food. I think a big part of it is the food. I think a bunch of people are eating food every day, and that's not food. I think I would venture like 1 out of 3 Americans don't actually have food. And like you go a week and they don't have actual food. You know, if you're like door dashing it every day, you're not eating food. And I could find you a handful of bachelors in big cities that aren't cooking for themselves or buying groceries at the farmer's market or whatever. They're door dashing it or Grubhubbing it or whatever, Uber eating it, and probably haven't had food in a week. So I think all those things are factors, which is why I invested initially in Hims and sort of like the IVF theme. And I sort of think an RFK appointment could have negative impacts to that investment thesis. I actually think you start taking some of this stuff out of the water, you take this stuff out of the food. The only problem is I don't say it's a problem. If I'm not mistaken, the other day, and maybe this is the compromise, he talked about perhaps not banning this stuff from the food, but creating more labels. I'm guessing, like in Singapore, they do this on every bottle of something you buy, like a beverage. There's like a rating. So you get an A, B, C, D, or F. And it's basically kind of a sliding scale based on like the sugar content per serving. And if the sugar's high, then the lower that rating will go. I'm guessing they'll do something like that, which would be a bit of a bummer. You know, it'd be a bit of a bummer if they didn't just go outright ban some of this crap and all this filler that's going in people, this low quality filler that's going in people's foods. German, I will email you. Thank you. Right on. Ben. This chat. Cost of eggs spiking. I eat at least 6 a day. I keep going back and forth between like eating super clean, like fish and chicken, and really just vegetables. And then I got so many people that are squawking at me, telling me, you know, how bad the oxalates are and in vegetables, and that I should do carnivore only diet. So I tried that, like high protein diet. But I've sort of got this theory. Hopefully there's somebody out there who's really smart who can like email me or tweet me or something and tell me, put me on the right track. But I've got this theory that like we used to go, you know, we'd kill a deer, right? Or kill this big animal, and we would eat the animal for like until that animal's gone. Then you don't have that animal anymore. So you'll probably eat fruits and vegetables to sustain. So some part of me thinks like flipping back and forth is the right evolutionary strategy. Like I started going like a week high protein diet, but all the same types of protein, like eggs and steak, or high steak or high chicken 1 week, high fish another, and then a week or 2 weeks like just super clean veg and fruits. I feel great doing that. You follow her. Well, let me see. Tiffany Fong still tweeting about microplastics. I don't know. She's wild though. I don't know. I started following her when she was talking to SBF, Sam Bankman-Fried. So she had that interview with him. Then I followed her, and she was getting more interviews, and then she went a different direction. She really took advantage, I think, of sort of the attention that she was getting. She's exploited the X algorithm to her advantage, and good on her. How quickly do we not trust the new labels? I mean, the reason I don't love that idea is if you read the labels already, what good is it? What good is a new label? You know what I mean? You turn around, you flip the package, and you see some seed oil or some science experiment in the ingredients. I'm throwing it back. So putting a simpler version of that, an extrapolation, an interpolation, abstraction of that on the front of the package, the hell's that going to do? It saves some of my time, but that's about it. They're putting filler in their faces, Vic. They're all crazy. I know. Botox and fake this, fake that. Just, it's so funny, you know. And then be talking about being environmentally conscious, loaded up with petroleum products. The world is so wild. We're such interesting creatures. I'm reacting to the chat way more. My son is playing with the door handle. I can tell. I'm reacting to the chat way more today. There's so much market stuff to cover, but you guys are talking about some super interesting things today. Grass-fed and grass-finished beef, if you can. Yeah. My wife and I don't know. There's some fancy grocery store by us where we buy a lot of our meat and vegetables. And you know, my son's 5 years old. Just a quick aside, my son's 5 years old, and we were out once, and I think we were getting a haircut or something like this. And he was hungry, so we wanted to stop. He wanted noodles, so we found this little place to get noodles, and grab him a water. And the water had a white top. He goes, "Dad, is this healthy water?" And then I sort of answered his question, and he goes, "But it has a white top. You said the blue tops are the best." And I thought, I couldn't figure out if that was like a good thing or a bad thing. You know, that this 5-year-old kid sort of has this awareness of products, and knowing, he doesn't know that the white tops are filtered water and that the blue tops or green tops are sort of natural or spring water. He doesn't know that necessarily. He just knows to like look for these different types of things. And I couldn't figure out if that's a good or a bad thing. And some parts a good thing because he has sort of that awareness that he will need. But I was like, why can't this, you know, can't just be drinking healthy water and I don't have to go look for you know what I mean? How do we create this outcome? And how many more that's what other thing I thought. How many new colors of water is this kid going to have by the time he's 18 years old? What weird stuff are they going to be doing so that we can have potable water? And what unknown outcomes will there be because of all the stuff that they'll do to this water? You know what I mean? Like that's what happens. That's your market economy. It's not bad, but let's say you put something out for 30 years. 30 years in, you go, by the way, this gives you cancer. And then the market adjusts for it. You get sued into oblivion, file for bankruptcy, you protect all your assets, and then the market creates a new product that doesn't do those same things. But like the people that use that product for 30 years still get stuck with the outcomes. That's sort of the harsh thing, you know? Like the bands from the Apple Watch. How many people wore those things and they're going to have a negative outcome? Or like Bluetooth headphones. This is definitely the conspiracy theory portion of this, but like I don't wear Bluetooth headphones. I try not to. I do sometimes, but I don't wear Bluetooth anymore. And it's because I think that the risk, even an outlier move risk, so a less than 5 delta of that being problematic, of us finding out officially that that's problematic in 25 years, it's not worth the convenience to me of just not having some hanging stuff coming from my ears. Yeah, I don't know. Sorry for the aside. Anyways, somehow I have not even covered I haven't covered a single instrument. So let's do this. I can't help it. You guys are talking about my hot button topics. You guys are talking about food, testosterone, conspiracy theories, water. This is like, we're in the pocket here, people. I used to drink water from the garden hose. Missed those days. Yes. We were in Bali. We went to a natural hot spring. Oh, I loved it. Loved everything about it. Our bodies are designed to eat 5% carbs, 95% protein and fats. The average American diet eats 60% carbs. Insulin is always spiked, which causes insulin resistance and chronic disease. Yeah, Mark, that's why I think again, my theory is there's the argument back and forth between the carnivore diets and like the keto, like eat clean, either white meat or no meat thing. And I'm like, both of you feel great because you're putting your body in the ketogenic state, which might be our natural state. Like burning glucose and becoming insulin resistant, that's probably not our natural state. It's probably behind a lot of the problems we're creating. But I think the reason both of those, you probably can't go wrong, is because you're putting yourself in a ketogenic state either way. In the movie Children of Men, people went sterile. That's terrifying. But I do think like this is what I think, like the more we're relying on IVF treatments, and this is no knock to anybody who's done it. I know lots of people and friends who've done that. But again, this is my crazy man thinking. Like this is the reason I buy physical books. I'm going to start with this. This will help. This is the sugar that'll help with the medicine I'm going to say in a minute. So the reason I buy physical books is because I know that digital books are part of someone else's digital library. It has my name on it, but if I read through all those terms and conditions, I'm going to quickly find out that I don't own shit. That I paid for something, I store it somewhere, but I don't own that thing. And at any point in time, some other company or entity can make a decision to remove something from any of those repositories. And if they can't now, they can just change the terms and conditions in the future to make that so. So that's why I don't buy digital. I don't want a digital library of books. I'd rather have a physical library that I have control of. Enter Bitcoin here, right? But like, that's what I have control of these things. You can't take it away unless you physically come to my place and you take away all these books. A lot of them are banned because that's how I rock. But anyways, so in other words, there's a centralized point of control there. And I don't like the idea of that central point of control. So I choose a different strategy that allows a distribution of control or more control in mind. So a world where a lot more people are using treatments to have children, if imagine that goes from, I don't know what the percentage of the population is, the American population. I'm just going to make one up, but let's say it's 5%. Let's say we go from 5% to 30%. So there's a big point of control now over the ability to recreate. And to me, that's sort of this scary world. Even if you're not talking about going sterile, and I know it's just a movie, but oh my God, I can just imagine some IG shareholder listening to this stream and going, get this guy off the air. But you have a single point of control there. And that's the scarier part to me. That is the scarier part of what could be done with that single point of control. Skeeter says a headphone thing is scary. Absolute Beginner says same, wired headphones only. And the hilarious thing is the expensive headphones are like, or the Bluetooth stuff, like their new models. What are they? $300, $200, $300, and the wired ones are $30. But they'll go away soon. Watch. Apple will stop selling wired headphones in the next 5 years. That's my bet. Kyle. Oh, thank you, man. That's so kind. I'm bordering on. I hope this is entertaining. I hope everyone doesn't take everything I say like 100% gospel. I am sort of tongue-in-cheeking it sometimes for entertainment's effect. Because here's the reality: you could listen to 1,000,000 people tell you that the S&P was down 0.2% today. You could listen to 1,000,000 people who give you 1,000,000 reasons why the S&P was down 0.2% today. You could listen to 1,000,000 people tell you whether or not the S&P is going to be up tomorrow. And I don't think that's where the value is. The value is in my personal opinion, the personality that stuff is coming from and the values that personality holds. And I think that's ultimately, when it comes to markets anyway, I think that's probably where it is. Unless you want some like very, very specific technical knowledge of something, right? Then you want a deep subject matter expert to just concentrate on that topic. Turning old people into food chips. Oh, Soylent Green. Yeah, scary. Not a lot of people have seen this stuff. Absolute Beginner says, are cell phones even safe? I don't think so. I've long said that. I've long said that there's going to be sort of like a big tobacco reckoning with cell phones. I have no evidence of this, by the way. This is just, I'm totally talking about my feelings. But I think just like there was this moment where big tobacco knew that their product was causing cancer. They knew it was addictive. I think the same thing's going to happen with cell phones eventually. It's just a matter of time. But by then, what are you going to do by then? Bonds at 115. That's my lead in. Bro, I'm batshit crazy. Bonds at 115. And the curve is mad flat. The curve, that's a technical term. The yield curve is mad flat today. But we've been tracking not only what the curve is doing since all these cuts, but that yellow line keeps moving. I know you guys can't see. Actually, let me help you visualize what I'm talking about. So let me go back 2 weeks. Watch this yellow line here on the yield curve. Okay, so when we start the cutting cycle back in September, this is what the yield curve looks like, the red line, okay? It's inverted across a lot of the curve, and what you see is once they start cutting, the long end starts lifting. They're dropping the short end, and as they drop the short end, the long end starts lifting. So we move towards uninverting a lot of the curve. Then the blue line comes. That's the cut in September, November, December. And then we hold in January. And now take a look at this. This is where we were at the beginning of February. Let's go to January. Come on, my baby. Let's go to mid-January. So that's where we were mid-January, around the meeting. And this is where we are now. So you can see the curve is actually, I'm saying what you should already know because bonds have rallied off their lows. but you can see that the curve is coming in. The long end is flattening, the long end is coming down a little bit, and the short end is also dropping, which is interesting. And so technically a world where your yield curve is flat, it's not a great economy. It's sort of stagnant growth. And I know we're not exactly flat. We are, if you look at the difference between the 10-year and the 2-year, it's about 25 basis points, which is significantly off the highs. Just in January, that thing widened out to 41 basis points. And I've said this, I'll say it again. I know I sound like a broken clock to many, but the long-term average of the difference between the 2-year and the 10-year is 100 basis points, which means what looks like normal to the economy from the yield curve's perspective is about 100 basis points difference, that the 10-year is trading with 100 basis points higher than the 2-year. Right now, we're only 25 basis points higher. So it's a fairly flat yield curve. But in that flat yield curve, we've got stocks just doing that. You would think that this is a rip-roaring economy. So one of two things has to happen here. Either stocks are telling the truth and the yield curve needs to catch up. And you've got, potentially 75 basis points of steepening in that curve, which means that long end needs to do some work. We need to get to like 5.5% in the long end. Or stocks need to price in some stagnation, less growth. It's hard to make that call. And the question really is that all they've got in the long end bond rally? From 110 up to basically 116? Was that all they had? This has been a really tough trade because I want to be short the long end, but I want to be short from a good price. And last time I was looking to get short. Bonds fell to 115. They rallied to 120, and I didn't think that was going to be enough. And then, of course, it just fell out of bed down to 110. And now we rally up to 115. So the question is, at what point do you pull the trigger on getting short? Or did I miss the window? Because I do think we're going to see 5% long end yields this year. I don't know. Am I crazy? I mean, that's a yes, but I think there was something. Hasbro up 13%. You guys didn't get my memo. Stop buying that junk. There's nothing great here. All right, let's do a couple more from the chat, and then we'll get going here. The real question is whether everyone is paid off enough to let it all slide. Yeah. Kind of. Or, here's the flip side. Or, because you can only pay someone off I've thought about this. People have lots of opinions about Elon. So I'm not going to go to any public policy. I don't want to make this political. It's quasi-political. All I want to say is if you take you back, Mark Zuckerberg, do you remember when all these people, all the advertisers created an advertiser boycott on Facebook? And that was basically sort of like collusion. to get Facebook to censor certain things. At the time, it didn't seem like that. At least that's not the way I read it. But with the benefit of hindsight, that's what it was. And Zuck caved to that advertiser boycott. He caved and he gave them what they wanted. And Elon went through a very similar situation where there was an advertiser boycott in order to get Elon to censor certain types of things from his platform. And he said, quite literally, GFY, go F yourself. And so I think at some level, the ability to be incentivized depends on where you are on the food chain. If you're the world's richest man, it's probably hard for somebody with less money or resources than you to entice you to change your behavior with a monetary incentive, right? So I was thinking about this, like, it's easier to buy somebody off who's in a less advantageous financial position. But the more money you have, the more ability you have to act with your own set of values and moral compass. So there's one of two things that happen here. Either, we get money out of politics somehow, or we just somehow find the most benevolent billionaires who want to act in the actual best interest of the people and look beyond their own incentive structure. I don't believe in fairy tales or superheroes, so I don't know how realistic that second option is, but it is possible. It's basically that's the whole concept behind Richard Thaler's work at the University of Chicago. That the idea that we're all rational actors in economics is actually flawed. There are many instances where people do not act in their own rational self-interest. Grumpy Mike, Zuck caved. That's a surprise. That's why I think it's like, bro, you know, everyone giving him, I don't want to say credit, but everyone like taking his sort of libertarian, he's trying to rebrand himself as some libertarian, wearing baggy t-shirts, growing out his hair, going to UFC events, training UFC and talking about free speech. It's like, bro, get out of here. You had your chance to show the world what your value system was. And I saw what it was. And so I don't, you whoever you are, it's defined not by the best of times, but the worst of times. It's defined in those moments of challenge. When all those advertisers stood up to you and told you that your stock is going to take a hit if you don't do what we say, and you caved, you showed the world that when push comes to shove, what type of individual you are. And now, when Biden is out of office, when you're already past that Murphy versus Missouri, I think that was the name. I might be fudging that. Murphy versus Missouri, the Supreme Court decision. You waited till all that stuff was done, and then you start saying like, "Woe is me! I was censored. They made me do this." When all the political liability was over, it would have been so much more beneficial to society if you would have said that during that Supreme Court case, but you didn't. And I don't know, I guess this is just the rag on Zuckerberg 4-minute spot, but I just don't get who's giving that dude credit, man. Who is giving that dude credit for what he's attempting to do? The anti-Austrian school of economics. I don't know what you're talking about, Kyle, but I want in on that conversation. Germany elections victor, coin flip on the DAX. Agreed. Besant said targeting lower yields on the 10-year. Yeah, Besant's been talking from the bond market's point of view, he's been talking a good game. He just had an interview, I think, on Bloomberg earlier today. So if you didn't catch that, you've never heard him talk, or you want to hear him talk, you didn't catch the interview. He had a pretty long interview on Bloomberg today. And I think I tweeted something about this, that just today I think Trump tweeted that he wants to start looking at balancing the budget now. So they're saying all the things, but I think it's, you know, all of us know. It's like you knew at some point Powell was going to cave. It's just, what's the number? You know what I mean? Because the people are not ready for the massive, devastating pain that would come if you let this thing delever. They're just not ready for it. The people are not ready for it. Would we become a stronger, more resilient people on the other end? Likely, yes. But there would be a lot of devastation along the way. We're just not ready for it. We're not prepared. And because nobody wants to take on that problem, they're going to avoid it. So Powell had a number. It's just, when is the pivot coming? Because this is all a charade. And I think the same thing to an extent with politicians. They're going to talk a good game, but if to balance the budget means you're going to eliminate $2 trillion of money going into the economy. And like, what do you think happens if you just turn that faucet off? You know what I mean? And if you do that now, especially before the midterms, what do you think the odds are of you not getting blown away in the midterms? You're going to get blown away. And they don't want to lose political power, so they're going to act in their own best interest here. So they're saying all the things, but I think the bond market barely moved today. You know what I mean? Because I think the bond market knows you can talk all that stuff you want to, but you know, the most hawkish that the Federal Reserve is willing to be right now is, we'll hold rates steady. That's where the Overton window on hawkishness is. We won't cut rates is where the hawkish end of the spectrum is here. That doesn't tell you something. Nothing will. All right, everybody. That's going to do it for us today. Vic, you're too critical of our lizard friend Zuck. He is doing the best he can to present as a human. Politicians will need bodyguards. That's actually, I'm going to leave you on this. This is the other conspiracy theory. You guys hit all of them today. Every crazy thought I've ever had, you somehow, you fished them out of me. At some level, I think, unless we're willing to go through a lot of pain, then just means wealth inequality is going to continue moving in the same direction. And I always simplify it to myself as just an island metaphor. If you put 10 people on an island and you give 2 people all the stuff, what happens? The 8 people are going to go take the stuff from the 2. And if the 2 people know that, what do? They hire 2 of the strongest people and they pay them some to protect them from the other 6. And so I think wealth inequality is sort of it's just that with more people. That if a handful of people have all the stuff, then the risk is that all the others without things, they want to come take it. And so what happens is those with all the stuff, they just start protecting themselves and isolating themselves. You know, they just buy all of Hawaii, build themselves nice shelters and bomb shelters, and then you can't. What are you going to go swim over there and get it? What are you going to go buy a plane ticket? You can't afford it. It's a cold game when you think about the world through the lens I look at. Anyways, so I think that's where we're headed. You know, just more gated communities and places that you never even see where they live. And you got to deal with the consequences. I'm sorry. That was wild. All I'm saying is more gated communities at the end of the day. I appreciate you spending some time with me and this is a weird episode. You can tell I've had a few days off. I appreciate you spending some time with me and listening to the rantings of a lunatic. If anyone asks me about this episode, I'm going to get a knock on the shoulder tomorrow. Victor, this is HR. Can we speak to you about yesterday's stream? All right, everybody. Do me a favor before you get out of here, hit the like button. If you got anything you want to talk to me about, I think the comments on this are not enabled. Don't know why. I don't know why you'd be afraid of the people. To me, that's the act of cowardice. You say something, you stand on business. So if you want to talk to me about anything I've said, either in the affirmative or you believe I'm dangerous for spreading misinformation, whichever end of the spectrum you're on, hit me up on Twitter at Victor Jones. The Owen Jones is 0 because I like to be difficult. I'm always up for debate, and I'm always down to learn something new if I'm on the wrong side of an opinion. Thank you for spending some time with me. I'll see you back here, I suppose, next week. This is synthetic Friday for the show, so I'll see you back here next week. Apologies for some of the absences this week, but we should have a full week next week. Until then, I've been Victor Jones. See you back here, same time, same place, same great network, only on Tasty Live. Peace.